policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg Markets Europe. We still have half an hour to go until the start of cash equities trading for this Wednesday morning. European equity market futures point to the downside. The FTSE struggled yesterday to keep up with the rest, partly weighed down by oil majors and mining companies. Now, more than 450 firms representing $130 trillion of assets have pledged to meet the net zero goals set out in the 2015 Paris Accord. Banks and asset managers representing 40% of the world's financial assets have signed up to the Glasgow Financial Alliance for Net Zero, which is chaired by the former Bank of England Governor Mark Carney. The commitments come as we head into Finance Day at COP26. Francine Lacroix is at the summit in Glasgow for us. Finance front and centre today then, Francine.
Yeah, finance right and center. And of course, a lot of the focus will be on what some of the disclosures could be. I'm hearing about possible mandates to make everything greener and get everyone aligned on the same page. I'm delighted to be joined now by David Schwimmer. He is at London Stock Exchange Group Chief Executive for a conversation, of course, on how green finance can affect some of what you're doing. Thank you so much, David, for joining us. First of all, when you look at some of the pledges, I know you've also been working on, common language, common data, which is the one thing that's missing, because you can have all the best will in the world. If you're not talking the same language, then if you're an asset manager or a company, you're not disclosing the same things. When are we going to see real progress? So I know we see progress now, but when are we going to have either mandatory disclosure or something with teeth put on the table?
So I'd say we have made enormous progress over the last few years, and we are going to continue to see a lot of progress going forward, including today. But if you take a step back over the past couple of years, TCFD has become a standard disclosure framework. And I think that's clearly recognized, and I think we'll see more embedding of that. I think we are seeing an alignment around taxonomies. The EU taxonomy, the EU, the UK are actually talking about taxonomies and aligning of taxonomies. China, another area of potential cooperation around taxonomies. The US is coming along, I'll say. So a lot of progress is being made, and I think we'll see more news, more announcements, whether today or in the near future, about greater alignment in a lot of these different areas. But go ahead.
Now, what are your clients then saying specifically about some of the green finance offerings in London?
So we have, in a couple different areas, really strong green finance offerings. So first, we have through our Refinitiv business, we're a leading provider of financial data and analytics, and that includes ESG data, one of the leading content sets of corporate ESG data going back 20 years, 10,000 plus companies, 450 metrics across companies. Then our index business, the FTSE Russell index business, we have sustainability or sustainable index products for all of our leading benchmark products. And that enables investors to align their investments to sustainable transition.
Where can you do better then?
Where can we do better?
Yeah.
I think this is an ongoing process. So I'll give you another example. We have in this past year to date, we've had about 1% of the capital raised on the London Stock Exchange, another part of our business, raised by fossil fuel companies. We've had 11% of the capital raised on the London Stock Exchange this year raised by companies that get what we call the green economy mark.
Yep.
And that is companies whose revenue is greater than 50% coming from green sources.
David, going back to the taxonomy, I mean, how can you make sure that an ESG investment is ESG? So what do your clients say about some of the data they're looking at? And again, even jurisdiction by jurisdiction, it can change.
Yeah.
Is this your biggest headache?
It's certainly a headache for a lot of the corporates out there because they get so many requests for information, so many requests, fill in this form, lots of different kinds of questions that they're getting. So where we're getting to is a standardization of that. It's a process.
Yeah.
But we are making progress. I think the industry's making progress. I think the various initiatives, the Transition Pathway Initiative, TPI, is coming up with a more standardized framework as to how to evaluate how companies are doing in terms of making the transition. So we're consolidating around some key standards, some key disclosure frameworks, some key taxonomies.
Will London really be able to dominate green finance?
I would say sustainable finance this is a global transformation. And if you think about the world economy has been dependent on fossil fuels for 200 plus years. And we're trying to change that over the course of the next 5, 10, 15 years. That's a massive transformation. London has been playing a leading role in that and will continue to play a leading role in that. But this has to be a global effort. Right. And LSEG, London Stock Exchange Group, of course, we're headquartered in London, but we're a global company. So we're participating in that on a global basis.
I know, but the UK is definitely trying to pitch London as a green financial centre, and we're seeing quite a lot of efforts also at Glasgow, and with some of the rules changing for London specifically. How difficult is it for the FTSE and actually in general London be seen as that, given the energy-rich companies that make up the index?
Well, I think in many ways London and the UK already are playing a leading role in terms of the premium listings on the London Stock Exchange. We already have mandatory disclosure or comply or explain disclosure around sustainable transition. So that is a leadership role. That's a leadership start. In terms of I'll call it the natural resource rich elements of the FTSE, it is a part of the FTSE. And I think it's something that we take very seriously, because the hardest part, and in many ways the most important part of what we have to do here as part of a sustainable transition is deal with the transition. And that means for the energy providers to actually make a transition to a net zero economy, to lower carbon emissions. And we're in a world today where 84% of our energy supply comes from fossil fuel providers. Right. So we cannot just shut that off. That will not work. We have to enable the high carbon emitting companies, the big energy providers, to make a sustainable transition. So we're helping them do that. We have a sustainable bond segment on the London Stock Exchange. We have a heavy focus on data around transitions. So that's a critical, in many ways, that's the hardest part of the transition that we all have to go through.
We know that negotiators here in Glasgow are trying to work on a global carbon market. When we get it, and I don't know whether you have a prediction on when it will be, what impact does it have on the private sector?
I think there are a number of different aspects of that. As with many issues in this arena, it's multifaceted. There will be a compliance carbon market, and there will be a voluntary carbon market. And I think that the private sector will participate in both. And as the markets often do, I think they'll create derivative products that can take advantage of the arbitrage between compliance markets and VCM, voluntary carbon markets. And we're in the early days of that, but I will say, a few years from now, that should be a very robust and a very active market, and that's an area where we plan to play a role as well.
I mean, are companies worried about it?
Worried about which aspect?
The fact that the transition could come quite quickly and they're not prepared for it?
Well, absolutely. I would say there's a whole range. Some companies are very, very well prepared. Yeah. Some companies see it as a huge commercial opportunity, and it is, for some companies, a huge commercial opportunity. Then there are other companies that are very much focused on transitioning their models, transitioning their companies. And then, frankly, there are some companies that aren't quite with the program yet. Yeah. And we sometimes hear from companies who are surprised when they're not included in some of our sustainable indices. Right. And they ask us what went wrong, what do we need to do? And that's part of the reason why we are also rolling out model guidance and, frankly, training for the corporates so that they can understand this better.
Dave, a final question maybe on clearing, because this, the transition comes to the end, or the extension comes to the end June 2022. What are you hearing? What are we going to see?
Well, we continue to engage with the various stakeholders on this issue. So that includes the ECB, the European Commission, all of our EU member banks and the asset owners, pension funds, et cetera, who rely on and use our clearing business in the EU. My expectation, I can't make any predictions here, but my expectation is that we'll find a way, that the European Commission will find a way to continue allowing EU domiciled member banks and other institutions to continue to access LCH Limited, because it is, I think it's recognized, it's clearly recognized that it is a critical, important service for the EU institutions who are using it. So it would be bad for them if they were cut off from it. We'll continue to engage with the various stakeholders. We'll see, I expect we'll see something probably early in the new year. But
okay. Fabulous. Thanks. So, yeah, because otherwise you fragment if you take it away. David, thank you so much for joining us. David Schwimmer there, the London Stock Exchange Group Chief Executive Officer. And with that, I'm going to send it back to you in London. Of course, we have plenty more interviews from Glasgow throughout the day.
Thanks very much, Francine. Live on the ground for us at COP26 in Glasgow. And just as you were speaking, we got further news lines coming through from the Chinese Foreign Ministry briefing there, saying China is willing to work with parties on methane controls, which is interesting in the context of the announcements we have seen from the US and the EU and others, which earlier on this week led to 90 nations signing a pledge to cut global methane emissions by 30% below 2020 levels by 2030. So if China does have anything new to say on that, that will be of interest. China not having advanced its plans around net zero or other commitments at Glasgow as yet. Let's get a Bloomberg Business Flash then. Let's go to Laura Wright for an update on all the corporate news flow. Laura.
Thanks, Anna. Lufthansa has posted a surprise profit in the third quarter, its first since the pandemic, as cargo demand boomed. Analysts had predicted a loss of 169 million euros. The German flag carrier says a reopening of the US border to Europeans will keep earnings positive through year end. Facebook parent Meta Platforms says it will no longer use facial recognition for photos and videos shared to the company's flagship social network over privacy concerns. Meta says it needs to weigh the benefits against growing worries about the technology. Facebook has used facial recognition since 2010 to encourage people to tag friends or family in content. It will now delete the more than 1 billion templates it's collected. Netflix has begun its long-awaited jump into video games, releasing 5 mobile games for Android. The titles are included in a Netflix subscription, and the company says there'll be no advertising or additional purchases required. The streaming giant sees video games as the next big thing and is also planning titles for Apple devices. Anna, I've heard you might be a gamer, so perhaps some positive news for you ahead of Christmas.
Where on earth did you hear that, Laura? Fake news. Certainly not here. Laura Wright, thank you very much. Others in my family, though, I cannot vouch for. Laura Wright with the corporate news flow this morning. Coming up on this programme, we speak to John Johnson, the CEO of the Danish pension fund, PKA, at the COP26 summit. That long-term money has very long-term priorities and therefore a long-term focus on climate change. We'll get that perspective at COP26. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to Bloomberg Markets Europe. 16 minutes to go until the start of cash equities trading, and European equity market futures point to the downside. As I was saying earlier, the London market found it heavy going yesterday. Some of the big banks to the downside, also some of the mining stocks and the oil and energy companies moving lower. With the theme of energy in our minds, let's get back to COP26 and the summit in Glasgow, which has seen climate ambition translate into pledges. Announcements made so far mean countries responsible for nearly 2/3 of global greenhouse gas emissions now have a net zero target in force. That's in contrast to 53% before the summit and only 10% in January of 2020. That is according to Bloomberg New Energy Finance. So we certainly have come a long way, however you slice and dice it, in terms of these net zero commitments. Francine Lacroix is at the summit with another guest. Francine.
Yeah, thank you so much, Anna. We're joined by John Johnson. He is the Chief Executive Officer of the Danish pension fund manager, PKA. They have assets under management of around $55 billion, and I'm delighted to speak to you, Mr. Johnson, for joining us. Thank you. When you look at some of the things, I know you've had a couple of deals that you want to talk about, which we will in a second, but overall, is there a worry that we're creating a bubble in sustainable investment? So we don't have really a common definition. People worry about greenwashing, although I keep on being assured by a lot of financial authors that actually know we're fine. But at the same time, there's so much money being poured in. What's it all supported by?
But, I mean, I think what we're seeing now is that way back it was the governments that were leading this and telling everybody that we had to achieve certain targets and so on. But now it's gone from a sort of a business threat to a business opportunity. So everybody is moving into sustainable energy and green transmission. And the result is that we do actually see a bubble right now. We do see that many investors want to move in and have their own green investments.
But is there a worry that there's greenwashing going on? And how do you hedge against a possible green investment bubble?
I'm sure that the media will cover us if we greenwash, so I'm not that afraid of that the greenwashing is really going on. EU is coming with a whole new taxonomy this coming year, and I'm sure that will, make it more, you could say, easier to find out how could you actually make up the figures and the numbers that you need to put in your financial reports to measure that you are actually doing the right work.
I mean, a lot of the focus today, of course, is on green financing. We spoke to Mark Carney a couple of days ago, and he reiterated once again something that we've been hearing from a lot of financial chief executives saying, look, finance cannot be the only way for this transition to happen. What do you want from leaders today? We have some of the roadmaps, but what do you need today, or what did you need yesterday to do a better job?
I need them to support the private sector in the beginning of whenever, back in the 90s, mid-90s, the Danish government supported the building of wind farms. And they took out some of the risk and made it possible for us to actually invest in these type of investments without risking too much and making sure that we could give a good pension for our members. And that's what I need from the government to do now. They need to help us in Power-to-X. They need to put up structures to put on a carbon emission tax and so on. And we need leaders to make and regulators to do something about that.
I mean, do we need to centralize the ESG database? And are we going to get it soon?
I don't think we need one ESG database, but we need a certain taxonomy to follow. And then I'm sure the industry, the MSCIs of the world, will make sure that they will provide the numbers for us so we can do this counting and accounting of whatever we do. But we need regulation to state what is green and what is not green and what is greenwashing.
Yeah, and this, I guess, is the most difficult thing that you can do, right? Even if you look at ESG, there's a lot of NGOs saying that there's not enough S in the ESG. So how do you match up the two?
It is difficult to match up the two, but if you don't start, you're not there at all. So we are very focused on both the E and the S and the G. So we do social investments as well. And currently we have invested in microfinancing around in emerging and developing economies and so on. And you can actually measure it. So if you do real investments, it is possible to provide the numbers and make sure that the NGOs are satisfied. Yeah. But there will always be NGOs, you know, that are more fanatic, you could say, and want more. But I think we do a good job for now.
Talk to me about some of the most lucrative returns that you've seen actually in amongst the space. Where can you make money in this transition?
PKA has done investments in wind farms and solar farms for the last decade, and about 10% of our asset base of the around 5 billion is now invested in this type of investments. And seeing a bubble, everybody wants to move in. And just yesterday, I sold a big wind farm with a very nice return. And so we see opportunities now, and we have a company that can actually structure this for us and do all the financing and the legal stuff. So we are moving into new investments, and we can sell some of the old, and we can make a good profit.
John Jensen, thank you so much for joining us today. He is the Chief Executive Officer of PKA. And Anna, it's very clear, he laid out very clearly actually what finance needs from regulators, needs from governments. And then, of course, we have some of the pledges with the G-fans that should be announced later today.
Yeah, really interesting to watch the announcements we get then later around financial disclosures. Interesting to see what membership of GFANZ really means for these members. And you've been talking to some of them already. Francine, thank you very much. Francine Lacroix with the PKA CEO there at COP26 in Glasgow. He says he sees a bubble in some of these green assets, and he's just sold a wind farm. Coming up on this programme, we'll get back to the stocks that we're watching today, here and now, when it comes to market moves. BMW beating the street with a jump in third quarter earnings. We'll get a rundown of the stocks to watch next. This is Bloomberg.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference, this week on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Bloomberg surveillance, the Fed decides. Will the Fed finally announce a date to start a taper? And how long will it last? Will they still view inflation as transitory? Find out Wednesday starting at 1:30 p.m. Eastern on Bloomberg.
Welcome back to Bloomberg Markets Europe. Still 7 or so minutes to go until the start of cash equities trading. European equity market futures flat to negative, certainly negative in the case of FTSE futures. Let's get the stocks that we're watching this morning. Tom McKenzie, anchor of the European Market Open, joins us this morning to take us through the stocks that we are watching. And Tom, throughout this earnings season, we've been tracking supply chain issues. Let's start with one company that's not citing those today, and that's Lufthansa. And then we've got a couple who do.
Yeah, Lufthansa is a surprise beat then for the German airline. They're reciting this demand for cargo, but also a pickup in terms of passenger demand. So the estimates were that they were going to post a loss of 170 million euros for the third quarter. They actually came in with a beat in terms of earnings up. They brought in about 17 million euros for the third quarter. They didn't talk about supply chains. They talked about that robust demand for passengers and for cargo continuing. They do expect that to be, in terms of earnings, to remain in positive territory for the fourth quarter. And they are saying that bookings are now back to about 4/5 of the pre-pandemic levels. So optimism there from Lufthansa.
Okay, optimism. So this is clearly around the passenger story, but interesting, they're talking about this record result, as you say, from the Lufthansa cargo business, which kind of links into the supply chain issues, doesn't it? And we're talking about supply chain issues at a couple of businesses. Let's start with BMW.
Yeah, they beat as well, in fact, for the third quarter, above average estimates by the analysts. They're looking at what they brought in is 2.8, almost 2.9 billion euros in the third quarter. That was up 50% year on year. Of course, the comparisons are worth bearing in mind, but it was well above the estimates as well of 2.5 billion. They confirmed their full year outlook. Executives at BMW, of course, this company is not immune to those supply chain challenges, particularly the semiconductors, saying that that strain will continue and remain as an issue through the rest of the year.
And briefly, Vestas. It's a good time to talk about wind power, COP26.
Yeah, absolutely. This should be a company that's doing very well. In fact, they had to downgrade their margins forecast about 4% for this year from a range of 5 to 7%. They have really felt the impact of transport costs and input costs. Steel is a major component when it comes to the production of turbines. We're going to be speaking to the CEO and getting more details just in the next 10 minutes or so from Vestas.
We look forward to that conversation. Supply chain instability lasting through 2022, so says Henrik Andersen, and you'll be speaking to him shortly. Tom McKenzie, European Market Open anchor. He'll be back to take you through the start of European equity trading. Futures have been pointing flat to negative. US futures are flat to negative this hour as well. It is, of course, Fed Day. This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Harmeet Singh is spearheading Levi's investments in innovation.
As CFO, the one important thing is to ensure you're able to connect the dots and always think longer term.
Watch the world premiere of Chief Future Officer this Wednesday on Bloomberg.
Good morning. Welcome to the European Market Open. A minute to go until the start of equity trading here in Europe. I am Tom McKenzie, and here are your top stories. Taper time. A reduction in bond purchases by the Fed is all but certain today. Global stocks are mostly lower after fresh highs in the US. A much anticipated pledge to cut methane emissions gets support from more than 100 countries on the final day for world leaders at COP, but super polluters China and Russia hold out. On the agenda today, finance. Firms representing $130 trillion worth of assets sign up to net zero pledges. We'll be speaking to the UK's Chancellor, Rishi Sunak, in Glasgow. Checking in on the futures, the market's on hold, a holding pattern ahead of that crucial Fed decision. We know essentially that taper is baked in. That announcement will be looking for any details from Jay Powell, the chair, as to the time frame for that taper, where it takes us into 2022 and what it means for the rate hike cycle. Where we'll see any pushback from Jay Powell around the market expectations that you will see 2 rate hikes by the end of 2022 by the Fed. Over in China, continue concerns about the economy and the spread of COVID. That's been highlighted by Premier Li Keqiang, but also by the actions of the PBOC around injections of liquidity. A surprise today within the Chinese markets. Let's check in on how things are playing out then in the first few seconds of the trading session here in Europe. The FTSE 100 is down 0.2%, despite the fact that iron ore has come back from the sell-off that we saw yesterday that should boost basic resources as a sector, which is key for the FTSE 100. In terms of the breakdown across the assets then, the US 10-year currently trading at 153. The yields are just slightly higher as we lead into the Fed decision. Crude is under pressure as well on the back of this push by President Biden to get OPEC Plus to increase supplies, currently trading down by 1.5% at $82 a barrel. Iron ore, as I say, has come back from yesterday, up 3.3%. That boosted the markets over in Australia. The CSI 300, I wanted to bring this to your attention, given the focus there on the economy and the spread of COVID, the worst in terms of the breadth of that spread since the outbreak in Wuhan in 2019. The CSI 300 currently at 4,821. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Lufthansa has posted a surprise profit in the third quarter. Its first since the pandemic as cargo demand boomed. Analysts had predicted a loss of 169 million euros. The German flag carrier says a reopening of the US border to Europeans will keep earnings positive through year end. Facebook's parent, Meta Platforms, says it will no longer use facial recognition for photos and videos shared to the company's flagship social network over privacy concerns. Meta says it needs to weigh the benefits against growing worries about the technology. Facebook has used facial recognition since 2010 to encourage people to tag friends or family in content. It will now delete the more than 1 billion templates it's collected. Netflix has begun its long-awaited jump into video games, releasing 5 mobile games for Android. The titles are included in a Netflix subscription, and the company says there'll be no advertising or additional purchases required. The streaming giant sees video games as the next big thing and is also planning titles for Apple devices. That's the Bloomberg Business Flash. Tom.
Laura, thank you very much. Indeed. Okay, let's focus then on the COP Climate Change Summit now. And one of the major cop-outs has been China, with multiple world leaders criticising the nation's lack of commitments. Bloomberg's Maria Tadeo spoke to Belgium's Prime Minister on this issue.
You say China, that's particularly important when it comes to China. Like, this is also about China complying with their commitments. And I wonder, with the carbon tax, is that something that then you feel it is justified?
Definitely. The mechanism of carbon adjustment tax at our borders is one that we need. And it's one that is putting everyone at the same playing field. It's a crucial one. China is today one of the biggest emitters in the world. If we really want to have an impact, the impact will be because we push each other to the same level of ambition, and a carbon adjustment tax is one of the instruments to achieve that.
Emmanuel Macron said we will have to help the poorer countries make this transition. It's the only way that's going to happen, but we also see, or should see, the big polluters increase their ambitions. Yes. I wonder, is that perhaps China, but is it also India, and how do you make that commitment to finance that transition?
Well, obviously the Western world has a big responsibility for the situation we're in today. So achieving our commitments in international climate finance, I mean, this is the right thing to do towards countries who are today really subject to climate change and who don't have the means to avoid that they make the same mistakes we make. But towards the growing economies, China, Russia, and so on, that's a different situation. And there we need to really push them to make the same commitments. If they don't, we will hold them for their responsibility just by the trading rules for trading goods, manufacturing, and so on.
So what you say is that you have to make a difference between the really emerging economies, but also others like China, Russia, that could actually afford to do more, and they're not doing it, in your opinion.
They're not. Well, we'll see what China will put forward in the 2 weeks to come. I think there is some pessimism now at the start of this conference, but let's hold our horses. Let's see where we are in 2 weeks. In a conference like this, a lot of things can happen, and in any case, I mean, Glasgow is about making things happen, and we will not have a second chance. We will not organize another meeting in 5 years to discuss things again. It needs to happen right now.
That was the Belgian Prime Minister, Alexander De Croo, speaking to Bloomberg's Maria Today at COP26 in Glasgow. Redhead crossing the screens right now on the Bloomberg. Vestas, of course, the Danish wind turbine maker, shares falling at 15%. 15%. Currently at 12%. They did fall to the worst part of this trading session, 15%, currently down at 12.5% after cutting their full year outlook again. The margins guidance has been cut to 4% for the full year from a trading range of 5 to 7%. The company's citing, of course, those supply chain constraints, the cost of transport and those input prices. Steel, of course, has rallied, and that is a key component for the production of these turbines. We are hoping to be able to speak to the CEO of Vestas just in the next few minutes or so to get more details on that earnings picture. Okay, coming up, we are back in Glasgow where we will be speaking with the chairman and CEO of MSCI. It's the world's biggest index provider. Stay tuned for that interview. This is Bloomberg.
Is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's a simple, these are hard numbers. Your emissions are either A or B. They're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked of other things. Now that's moving to become mandatory.
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, you know, what the challenges with getting people back into the workforce.
I was just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 137 right now. It's a weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
Welcome back to the Open. We are 9 minutes into the European trading day. The European stocks are essentially flat. Investors on hold ahead of that Fed decision. We have the BOE as well tomorrow. But it's still a big day for corporate earnings. We had BMW, we had Lufthansa, and we had Vestas Wind, one of the world's biggest makers of wind turbines. It's cut its outlook again. This as commodity prices surged. And the pandemic, of course, has disrupted supply chains. Earlier this year, the company lowered its revenue forecast amid supply issues that make it difficult to deliver turbines and source materials. Very pleased to say that we are joined now by Vestas Wind Systems CEO, Henrik Andersen. Sir, thank you for joining us on no doubt a busy day for you and the team. Let's talk about margins. You've cut the forecast for full year. Margins of 4% is what you see now. Previously, the range was 5 to 7%. Where are we in terms of the margin pressures for this business, given all of those supply chain constraints and those input costs? Are we bottoming out now in terms of margin, or is there a risk of further erosion?
First of all, thank you for having me, and indeed it is a positive day in some ways, because I think the outlook for the industry and also the strategic points for the industry has never been better. I also will say what I normally use as an enormous strength, which is a very high backlog of order intake. Probably in these previous couple of months, the backlog has proven to be even more challenging. We have had a strong quarter in terms of activities we've delivered to our customers in an environment where customers seeing energy prices increasing rapidly, but unfortunately also the scarcity and what is hitting us in the supply chain. As much as we are doing everything we can to eliminate those risks, we cannot be unaffected by it. And that's what we see right now. That's right from the raw materials, the components coming into factories, but it is indeed also transport coming in, but it is also the outbound transport to sites, which has not only a price and cost element, but probably worse right now, a disruption element, which also causes delays to site.
So what are some of the concrete steps that you are putting in place to mitigate some of these challenges?
We would not have been anywhere near delivering the very high 5.5 billion euro in the quarter of projects. We have delivered projects in more than 30 countries in the quarter. One of the countries has almost been a complete lockdown in the quarter, which also is a testament to the strength of the 29,000 colleagues of mine delivered across the world, like a country like Vietnam. And if we haven't taken dramatic steps in mitigating those actions, we would not have been able to deliver and therefore also support Vietnam and our customers in Vietnam and in more than other 30 countries. So we are taking mitigating actions every day. But I will also say here, this is not about planning long quarters away, because actually there are, unfortunately, new conditions almost not daily, but at least weekly in the current environment.
And you see, and you've illustrated this, and you've talked about this, the expectation that those supply chain constraints will continue through 2022. Where are those constraints most acute?
I think the most acute right now is probably first of all, the unpredictability, but then lastly, not also that there are a volatility you haven't seen. If you take the electricity and energy prices, it's not about several percentages, it's into now the several 100%. And in some markets, it has even been into more than 10 times up of the electricity prices. That causes the whole industry a challenge, because customers will find it difficult to complete their projects, because we will come with price increases from the raw materials and the components, but they might have had an offtake together into the grid with the governments. And of course, that causes also our customers to have the challenges in predicted of how their business case looks like. So it is indeed an industry that is not coping well with price volatility of what we have seen. And unfortunately, the price volatility in the last quarter has remained, and it has still moved adverse for us. We are mitigating that, but we are also very cautious about our order intake under those circumstances.
Okay, let me fold two questions into one before we let you go. What is the ability of your customers to absorb some of these costs? And what is the delivery time frame, the impact on that for some of your turbines?
I will say right now, all our turbines, the value and the output of the turbines, meaning the electricity prices and green electricity prices, is soaring like never before. So, of course, that is an opportunity to sit down and deal with those. So I think that is just a matter of months, quarters ahead. And then we also get a clearance of how we can do those projects and project development together with our customers across the countries. So I don't foresee that necessarily as a big hindering right now. It is as much as a hindering is to actually get the physical components and projects and turbines to the site where customers are requesting it.
Okay, Henrik Andersen, CEO of Vestas Wind Systems. We appreciate your time. Thank you for joining us. The stock currently down just around 12% on the cut to that outlook and concerns that supply chain constraints will continue through 2022. Okay, the COP26 climate talks are well underway with the procession, of course, of world leaders setting out their plans for curbing global warming. And Bloomberg's Fran Sneakwa has a front row seat to monitor events for us. Fran, it's all about finance today. I know you had a really great and insightful conversation with the former head of the BOE, but now you've got another lineup of corporate guests to drill into these discussion points with.
Yeah, thank you so much, Tom. You're absolutely right. So the world leaders left. Today it's the place of finance. Tomorrow we'll focus on energy. It's interesting to see actually what the transition means for finance. We have a number of pledges. I think what we really need to try and understand is whether those pledges then translate into real action. So, for example, if you're a financial company, whether it touches also your Scope 3 emissions. Now, to talk a bit about the dynamics at play, we're joined by Henry Fernandez, the Chief Executive of the MSCI, the world's biggest index provider. Mr. Fernandez, as always, thank you so much for giving us a little bit of your time.
Thanks for having me.
So, first of all, what do you need from world leaders to make a real difference? When you look at some of the ESG factors that you decide to put the MSCI indices on, what's the next step for you?
So the next big event, obviously, is climate, right? ESG is been a very good determinant of value in the markets around the world, especially since the pandemic. But obviously, climate is just a smaller part of ESG, and we need to make it a much bigger part. So I believe that the climate effect on portfolios for investors and on companies is going to become even bigger, much bigger than ESG itself. We at MSCI have begun to differentiate between ESG, where climate is part of, and climate itself.
But are they measurable outcomes? And do we need to make them measurable outcomes instead of pledges from companies?
Absolutely. So at MSCI, we have now what is called the Net Zero Tracker, which we take all the companies in our broadest index, that's 9,300 companies, 99% of market cap of the world, and we have estimated emissions per company, all 9,300 companies. And at the moment, it's 11 gigatons of carbon that they're emitting, and the trajectory is to 17 billion gigatons. So we're going in the opposite direction. So the world of all these companies is basically a projected 3-degree world. So only 10% of the companies of this index are in a 1.5-degree world. So it's pretty worrisome, and more than half of them are in a 2-degree world. So I think it is really incumbent upon us and many other leaders to call out these companies and develop the plans for them to go into net zero.
So is the only way to make actually this mandatory, to make sure that it gets reduced far quicker?
I think disclosure should be mandatory, and hopefully something like that will come out, of COP26. Being able to disclose your carbon emissions, disclose your suppliers' carbon emissions, where your facilities are, because that helps us double check, where the emissions are, and all of that. And so that should be mandatory. Now, I think the market forces are going to be brutal, relentless in starving capital from those carbonizing companies and providing more capital to the ones that are, doing something about climate. That is coming very soon.
And do companies realize this? Because if they realize this, so if it's just a matter of surviving, then you're going to have a switch to at least a transition phase quite quickly.
Well, not a lot of companies yet. This is a tsunami coming at them. And many companies have not totally realized that this is coming in a big way, and it's very accelerated. It's not 10 years from now, 20 years from now, it's in the next few years. So we're beginning to see that, like in the differences in green bonds, between a regular bond and a green bond. That's a difference in cost of capital. So I think this is going to increase rapidly in the next few years.
So is there worry that investors that, for example, only invest in ESG sustainable companies run out of stocks to invest in?
Yeah. So the world should not be divestment. You know, if we were to divest of all the carbonizing companies in the world, your portfolio is going to look very small.
Right.
Very small. The way to do this is engagement. You have to get capital. You got to get asset owners, asset managers to engage with companies and put pressure on them that they have to go on a decarbonizing path. Right. Because if they don't, you know, they're not going to have access to capital, and their cost of capital is going to be a lot higher.
Yeah, but if you stop investing in them, it'd be a lot quicker. The transition would happen quicker.
Yeah, but somebody else will come in and invest.
Right.
That's the problem. The problem is the other problem is, you know, that if a publicly traded company gets a lot of pressure, they can go private and then hide. So the standards need to be for private companies as well. These mandatory requirements of disclosure should be for private companies.
You talk about a tsunami. Is this now or is it in the next 6 months? When are we going to see the real liftoff?
We already see it. And this year, you know, because of COP26 and because of the new administration in Washington, you're beginning to see quite a lot of realization that this is coming and there is no place to hide. Now, market forces take time, obviously, but we are going to see the most massive reallocation of capital and repricing of financial assets that history has ever given us, and it is a matter of, you know, at most years, you know, but it is already developing fast.
When you look at the price of carbon or the carbon market, how will that impact private investment?
Well, that would accelerate it dramatically, but unfortunately, we haven't been able to get any good news in the establishment of prices of carbon and. You know, and you know, governments around the world need to understand that they cannot do it themselves. They have to get the private sector to react to incentives. Incentives could be obviously disclosures, taxation, and the like, but a big incentive will be the establishment of a price for carbon. If you're carbonizing, you got to pay the price. You got to internalize those costs into your cost structure and eating into your profits in the company.
Thank you so much for joining us. Henry Fernandez there, the MSCI Chief Executive, joining us. Of course, it's day 3 of the week, but it's actually day 4 of these negotiations here in Glasgow, and we'll have plenty more throughout the day.
Great stuff, Fran. Thank you very much indeed. OK, coming up, we have an interview with the UK Chancellor of the Exchequer, Rishi Sunak. That is at 3 p.m. this afternoon. And don't miss our special half-hour programme here at COP. That's at 8:30 London time. This is Bloomberg.
City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Deutsche Bank ready to pay more and pay out more in terms of bonuses for staff to have that strong talent that I'm sure you want?
Well, look, it's a war for talent. It has been, in other cycles before. It is now. We're finding that we're competitive in that war for talent.
Welcome back to the Open. We are 24 minutes into the European trading day. Stocks Europe 600 gaining 0.1%, but essentially investors on hold ahead of this Fed decision. In terms of sectors, basic resources at the top of the list, energy at the bottom on the back of that drop in the oil price. Okay, the Fed is widely expected to announce tapering of its bond buying program today. Jerome Powell will likely say that's not a step towards raising interest rates anytime soon. For more on this, we're joined by Bloomberg's cross-asset reporter, Justina Lee. Justina, how much of the focus is then on the time frame for the taper, where it takes us to in terms of 2022, whether it's the mid or early part of 2022, and what that tells us about the rate hike cycle? And will the Fed push back? Will Jay Powell push back on the market expectations for 2 hikes next year?
Right. I mean, the focus today is really on the trajectory, because I don't think anyone's expecting any surprises to the headline, which is no rate hike today, a cut to the asset purchase program. But I think people will really be focused on, are they going to be thinking about how much to cut at every single meeting? And kind of how good would Jay Powell be at convincing markets that they're not thinking about rate hikes until they finish tapering the entire program? And that really is the key question here, because right now we already have markets pricing in, more than 2 rate hikes before early 2023. And that does not seem to be in keeping with what the Fed has been telegraphing so far.
How much should we be expecting them to comment as well on the inflation dynamics and particularly what's happening with wages in the US?
Right, exactly. I think economists are expecting Jay Powell to kind of talk about how they're still expecting inflationary pressures to abate over time, but maybe not use the word transitory like he used to, because we have seen cost of living kind of remain quite elevated, and probably more elevated than the Fed originally expected.
And US households are starting to feel that, and certainly the US Treasury Secretary continuing to push, Janet Yellen, the idea that these inflationary pressures will start to ease next year. Justina, thank you very much indeed. A busy day, of course, for you and the team watching the markets ahead of this all-important Fed decision. The taper is essentially baked in. It's the time frame, and it's what it means about the expectations around rates. Coming up, we are back at Glasgow for a deeper dive into COP26. Don't miss our special half-hour program. That is next. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities sono un'occasione.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome, everyone, to the Bloomberg COP26 Climate Summit Special. I'm Francine Lacqua here in Glasgow. Now, here are your top stories. Joe Biden calls methane reduction vital. A much-anticipated pledge to cut methane emissions gets support from more than 100 countries. China and Russia officially hold out from the agreement. Beijing says it's willing to work with other parties. And on the agenda today, it's finance firms representing $130 trillion worth of assets sign up to net zero pledges. This hour, we speak to the BNP Paribas chair and to the chief executive of the Institute of International Finance. So on the last day of world leaders gathering in Glasgow, the US and the EU also announced a global partnership to cut methane emissions by 2030. The so-called Global Methane Pledge aims to limit methane emissions by 30% compared to 2020 levels. Now, more than 100 countries signed up to the initiative. President Joe Biden launched an assault on methane, declaring it one of the most important steps that can be taken to curb global warming.
There's a lot of pressure on banks because our clients are demanding this. Our investors are demanding this. The politicians, the world's demanding this.
We've really started to see climate risk becoming a key prudential risk as identified by our regulators. So we look to publish our carbon footprint of our €440 billion loan portfolio by the end of next year.
Basically having a department within the bank which will be having up to 250 people, bankers, specialists in several domains to really accompany our customers into the net zero banking transition.
In my opinion, we need to put a price on carbon, and I think this is something that's very important. There's an enormous premium for certain green technologies. We can invest in technology that can collapse that premium and allow us to deliver a much more sustainable future.
I think the way to do it is to have good standards, have government take more of the metrics and disclosure and offset validity question into a more formal sector.
Well, there were two major cop-outs, so super polluters China and Russia. President Biden chastised President Xi and Putin for not signing up, and this morning Beijing said it was willing to work with signatories on methane controls. Now, banks and asset managers, also representing 40% of the world's financial assets, have now pledged to meet the goals set out in the Paris Climate Agreement. More than 450 firms representing $130 trillion of assets now belong to the Glasgow Financial Alliance for Net Zero, GFANZ, almost double the roughly $70 trillion at the time of its April launch. Now, for Mark Carney, who chairs the organization, the announcement marks a milestone moment after he managed to get some of the world's biggest financial firms to actually sign up at the 11th hour. We have an exclusive conversation with the chair of BNP Paribas, Jean Lemierre, who joins us now. Mr. Lemierre, thank you so much for joining us. I know you're in London. I'm in Glasgow. I hope you can hear me. The focus is definitely on finance today and what some of the big financial firms around the world can do. Mr. Lemierre, I also know that BNP Paribas recently announced the creation of the Climate Transition Unit. What exactly is the purpose of that unit?
Well, we have been very much committed to fighting against climate change now for a few years. We have taken this commitment very, very early. The first stage of the commitment was to decide what we do and what we don't do. So we have started by creating bans on activities we shall no longer finance. That was the first step. But in banking, we need to work with clients. We need to support them. Fighting against climate change will be a combination of efforts by banks and their clients. That's the reason why we have decided to put in place a sizable team, 250 people, to work with the clients one by one, to support them when they need, to elaborate policies just to make sure that we meet the targets we have taken commitment on. So it's really to grow, to support a joint work between us and the clients.
It is now more lucrative for banks to look at green finance than is fossil fuels. So why do banks and finance keep on supporting some of the fossil fuel companies?
Well, the world is changing. We are in transition. I think the key debate will be more and more about transition, which is how to shift from the old world to the world we want. And in order to do this, we need to support transition. That's exactly what I was speaking about, working with clients. We shall make sure that clients have a clear strategy to meet their targets within the global challenge, and we support them doing so. When I look at most of the major oil companies, they are shifting to a different agenda. They are shifting, many of them, not all of them yet, but it will come. Many are shifting to production of renewables, for instance. That's exactly what we need to do, to finance new, good investments.
Do you worry, Monsieur Lemierre, about greenwashing? So I know some of the French banks are very well positioned to do structured products. There have been concerns, for example, about some of the carbon offsets. Could we see structured products used in climate to get away from some of the commitments that were pledged?
Yes, I'm worried, and it would be a big mistake. That would be a big mistake of the industry and would be a big mistake of the world. Why? Because it will simply not meet the target. You know, we shouldn't play with this. We have to be serious and committed. So yes, it would be a mistake. Now, many people will come on board to try to avoid that bad situation. In banking, supervisors are coming on board. And they are right. They are right to try to test and to monitor what's going to happen. We shall learn together how to do it. So supervisors will have a role. Public opinion will have a role. Governments have a role. But the simple point I would like to stress upon is it would be a mistake to do this. It would simply postpone the solution. And we don't have time. We need to do it. And we have to be serious.
Yeah. Monsieur Lemierre, can you talk to me a little bit about some of your concerns maybe regarding inflationary pressures and what that means for the markets? Is there a danger that we see a taper tantrum right when we're also talking about climate finance?
Well, on inflation, of course, it's a concern. We need to have in mind what's happening. But for the time being, I'm not too much worried about the impact of high inflation. We need to remind that we are in a specific situation, getting out of a massive lockdown at the world level. All the economy has been shut off. Most of the economies have been shut down. And we go back. We go back to business. We go back to activity. So it does create tensions. It is unavoidable. And we shall see this. We shall see increases of costs for various reasons, you know well. But does it mean there will be inflation for the medium term? There will be a high rate of inflation. For the time being, I don't believe in this. But we need to be watchful. We need to monitor this very carefully. But I continue to think that what we see is temporary.
Do you worry, Monsieur Le Maire, in general about the economy? And again, this fits in climate change or sustainability, because if we're too distracted by dealing with immediate problems with the economy and COVID still, does it actually detract us from some of the sustainability pledges?
Well, what we see today is a fantastic resilience of the economic system. It goes back as normal. There is a massive rebound everywhere. There's a recovery. We see shortages, labor, supplies. All of these phenomena are temporary, but we see a massive rebound. So the system is not hurt. The system is not destroyed. Whatever we may say, the system works. So the real question today is, are we able to go a step further? Are we able to create growth after recovery? That's the question for 22, 23, 24. Most of the people in the world are very committed to this. In the US, there are big fiscal packages. In Europe, we see the same. In China, they try to do it. So we see efforts to create growth after recovery. That's the real challenge we need to keep in mind. And sustainable finance, ESG, will be part of it. It's a big challenge requiring investments, skills. So it's a new border. I do believe that the agenda of climate, of course, is key for the planet, but it's good for the economy. That we'll have to invest, we'll have to create new technologies. So this will be part of this. This is exactly what the EU does, and most of the European countries are investing a lot of resources to support this. So I'm quite positive about this.
Thank you so much. Quite positive. Thank you so much, the BNP Paribas chair there, Jean Lemierre, for giving us a little bit of his time, as always. Now, coming up a little bit later today, we'll be speaking to the UK Chancellor of the Exchequer, Rishi Sunak. Don't miss the conversation after 3 p.m. London time. He actually just showed up moments ago here right in front of the plenary with a green briefcase. This was, of course, reminiscent of the red box he uses for budget. This is Bloomberg.
China is a gigantic part of our economic life and will be for a long time, for our lifetimes. But that does not mean that we should be naive in the way that we look at our critical national infrastructure, the way we look at, you mentioned nuclear power, you mentioned 5G technology. Those are all legitimate concerns that any government, many other governments around the world have. But I've said this many times, it's worth repeating, I am no Sinophobe, very far from it. I think.
Do you think you're the last Sinophile in the cabinet?
No, I expect there are lots of... look, China is a great country and civilization.
What about wind power? Would you let them buy offshore wind power? That's infrastructure.
I think you'd have to
railways.
You'd have to look at what was you're defining as strategic or critical.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome to Bloomberg COP26 Climate Special. I'm Francine Lacroix here in Glasgow. Now, on the agenda, of course, finance. More than 450 firms representing $130 trillion worth of assets now belong to the Glasgow Financial Alliance for Net Zero. Well, joining us now to talk about all of this, what it means for the members, is Tim Adams, Chief Executive Officer of the Institute of International Finance. Tim, as always, thank you so much for joining us. I mean, it's a lot of money. It's exciting. I know we've spoken to a number of chief executives that are pumped that actually this is now coming to fruition. There could be to the point because there are pledges. Right. What needs to be mandatory to make a real difference?
Sure, Francine. Well, first of all, it's a pleasure to be here with you today. You guys are doing a fabulous job. It's great to be here. Look, it's a lot of money, but it's needed. We need trillions to transition, and it's going to take a long time. There's a number of industries that have real challenges in terms of how quickly they can get there, but the financial sector is ready, willing, able to support that transition.
So what is the one thing that you want to see today? I know we have commitments. We have a nice Bloomberg scoop giving us some of the money. Where does the money really need to go to make a difference? Do your members say, look, I'm working on Scope 1, but Scope 3 is much more difficult, and this could take 30, 40 years?
Right. Well, we need common standards, common taxonomy, common data, methodologies. We need consistency and coherence and coordination and cooperation. We need a public sector that's showing up with the right kind of policy regimes in place, but we just need to work more closely together. It really is about coherence and cooperation.
Okay, are you here to do business? If you speak to a lot of chief executives, like, again, what are they here to do? I know that they're trying to lobby leaders, and at the same time, at the margins, we have this coalition of the willing, which could be, a coalition of the committed.
Right.
Where does the money go to?
Sure. Well, it needs to go into developing and emerging economies where 2/3 of emissions are coming from, and they simply don't have the resources. So we need to help the emerging world. The money that's been pledged so far is too little and too late. So public sector needs to do more. But we need to build vibrant capital markets. We need to help our institutions intermediate the trillions that are needed.
Okay, what do we do with China right now? So there was a delegation. I heard they're very engaged. At the same time, we didn't have President Xi. We had strong word from Joe Biden. Is there any commonality between U.S. financial firms and Chinese financial firms to come together to actually make a difference on the private sector level?
Sure, absolutely. The IF represents firms globally, including 35 Chinese institutions. They're committed. And despite the fact that President Xi didn't come, I don't think that's an indication of China's lack of willingness to do more, and I think they will do more. We can't solve this without China because they're 30% of global emissions. They're an important player. They are part of the solution.
We had a good conversation with the chief executive of the MSCI index, and he has a lot of data looking at what companies are doing. And he says, look, what's actually quite incredible is that some companies, even large companies, just don't realize that this green finance tsunami is coming their way. Do you have members like that?
Well, I think our members have done a really good job of getting up to speed, but there's so much work to do. Again, it's just about creating a common methodology, taxonomy, data, metrics, and just disclosure and reporting. There's a tremendous amount of work to do, but the amount of work that's underway is really quite daunting.
When are we going to get a carbon price? I know we keep on talking about it. That would make a huge difference.
Francine, it would make a huge difference. We keep asking for it. That's where the public sector could lead.
Right.
They're not. And then, until that happens, we'll back into it through cap and trade systems and shadow pricing. But we need a price on carbon. That would make a huge difference.
Why don't we have it yet? So we have so many pledges. How do we make sure that this, gets translated into action?
Right. We don't because voters don't want it, because they fear what that means for home energy prices and for the price of gasoline. And so what we have to do is help our voters, our society, understand the need to transition and what that entails. And so far, we haven't done a very good job of that.
Is it up to politicians to help with subsidies, and how difficult is it given we're still dealing with the pandemic?
Oh, sure. There's all kinds of systems you could put in place to have a carbon tax and then rebate that based on, say, income levels. But yes, we need to lead, and we need to have a price on carbon.
Tim, you've been traveling a little bit. We caught up, I think, about a month ago in London. Does it feel a lot more open? Is it easier to do business? Are your members feeling good about the future?
They're very optimistic about the future, and it's much better than it was a few months ago. Seeing you in London a few weeks ago was great. We're getting back out. I think people are ready to do business. People are tired of sitting at home. They're tired of Zooming. They want to see each other in person. That's why it's so important to have these kinds of meetings.
Are we going to see a lot of volatile markets? I mean, almost every day we talk about supply chain issues. We talk about, some of the things in terms of the energy crisis. I mean, here, even in the UK, I know it's a small proportion, but they're actually burning coal.
Yeah, I think volatility is with us until the supply side catches up. It's going to take a while. Demand is so strong, especially for goods. You look at the United States, the number of container ships off the West Coast to Long Beach and Los Angeles. Eventually you'll work through it. Eventually prices will come down. But until then, it's a real challenge.
Are you disappointed by how much leaders are doing? I know we touched on it a little bit, but there seems to be a lot of mobilization from private companies. And so the pace at which private companies are going is really, incredible compared to some of the public money.
I'm so proud of the private sector, but also my industry, the financial service industry. We really showed up. We really came here to show leadership with great commitments. Mark Carney and others, you had Brian Moynihan on this morning. They've done a fantastic job. We're here to get something done.
All right, Tim, thank you so much for joining us. Tim Adams, there, Chief Executive of the Institute for International Finance. Now, coming up a little bit later today, we'll also be speaking to the UK Chancellor of the Exchequer, Rishi Sunak. It'll be interesting to see his pitch for making London the green finance capital of the world. Don't miss that conversation, 3 p.m. London time. This is Bloomberg.
Its top spot as Asia's busiest airport in 2020 when passenger traffic slumped 88% from 2019. The lack of a domestic market and strict COVID rules have made for a slow recovery, and walking through the airport, the majority of F&B outlets and shops do remain closed. Here in the departure hall, long stretches still remain boarded up in areas where you would typically see throngs of passengers waiting to board their flights to destinations across the world. Only 2 lounges do remain open to travelers, one operated by the Plaza Premium Group and the other by Cathay Pacific, down from the 12 that are usually open here at the airport.
Unfortunately, when COVID had hit, we had closed a lot of our lounges and airport hospitality services. We're cautiously optimistic with the growth.
COVID certainly has forced a rethink of strategy to be nimble in the face of policy uncertainty during the pandemic era.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This isn't just something we have to do to protect the environment and our future. It's an enormous opportunity for all of us, all of our nations, to create jobs and make meeting climate goals a core part of our global economic recovery as well.
President Joe Biden, they're launching an assault on methane, declaring it one of the most important steps that can be taken to curb global warming. Now, let's have a lot more, of course, from Glasgow, COP26. On the last day of World Leaders Gathering in Glasgow, that was yesterday, the US and the EU announced a global partnership to cut methane emissions by 2030. Now, the so-called Global Methane Pledge, I sometimes call it methane, sometimes methane, but it aims to limit methane emissions by 30% compared to 2020 levels. More than 100 countries signed up to the initiative, and two big holdouts, super polluters China and Russia. So now let's get a roundup of the stories you need to know with Bloomberg's Laura Wright. Hi, Laura.
Hi, Francine. Banks and asset managers representing 40% of the world's financial assets have now pledged to meet the goals set out in the Paris Climate Agreement. More than 450 firms representing $130 trillion of assets now belong to the Glasgow Financial Alliance for Net Zero, the organisation championed by former central banker Mark Carney. That's almost double the roughly $70 trillion when it was launched in April. China says it won't abandon its climate goals by moving back to coal. According to a key state-run daily paper, the country is unlikely to embark on major new developments of coal-fired power. China is boosting output of coal to ease current shortages of electricity. President Joe Biden says that Russia, Saudi Arabia, and especially China were mistaken to skip the COP climate conferences this week. He says that Beijing missed an opportunity to participate in global leadership. A Chinese foreign ministry spokesperson says the world needs action, not empty rhetoric. Lufthansa has posted a surprise profit in the third quarter, its first since the pandemic, as cargo demand boomed. Analysts had predicted a loss of 169 million euros. The German flag carrier says a reopening of the US border to Europeans will keep earnings positive through the year end. Facebook's parent company, Meta Platforms, says it will no longer use facial recognition for photos and videos shared to the company's flagship social network over privacy concerns. Meta says it needs to weigh the benefits against growing worries about the technology. Facebook has used facial recognition since 2010 to encourage people to tag friends or family in content. It will now delete the more than 1 billion templates it's collected. Netflix has begun its long-awaited jump into video games, releasing 5 mobile games for Android. The titles are included in a Netflix subscription, and the company says there'll be no advertising or additional purchases required. The streaming giant sees video games as the next big thing and is also planning titles for Apple devices. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thank you so much. Now, coming up, we have an interview with the UK Chancellor of the Exchequer. He is, of course, Rishi Sunak. That's at 3 p.m. this afternoon. Also coming up, we have a number of ministers. In the next hour, we interview the Indian Environment Minister, Rameshwar Prasad Gupta. He joins us from COP26 here in Glasgow in around 10 minutes. The focus, of course, will be firmly on some of the pledges, and the Maria today will be hosting a conversation on responsible consumption. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that as either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, And we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
The Fed has the luxury of being a first mover. We've been talking about normalization and inflation, then stagflation, but this has been a process since March.
The Fed is not trying to kill the expansion. They're trying to extend it, but they may have to address the near-term pressures of inflation.
There's a very strong tendency in the futures market to overprice what the Fed is going to deliver in terms of rate hikes.
There is a really important moment here where we acknowledge uncertainty as a proper risk management tool and just how binary the central bank outlook is.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kayleigh Lyons.
It is 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, November the 3rd. Our top stories today. A wake-up call to President Biden and the Democrats. A Republican backed by Donald Trump wins the Virginia governor's race. It is Fed Day. The central bank's policymakers are likely to announce that they'll start reducing bond purchases. And Finance Day at the United Nations Climate Summit, firms representing 40% of the world's financial assets have pledged to meet the goals set out in the Paris Agreement. A busy day then, plenty of news flow, plenty of macro items on the agenda to look ahead to, Kayleigh, and front and center for us, of course, is everything to do with the Fed and everything that's happening in Glasgow at COP26.
Yeah, the Fed decision is going to be the big market event today, and tapering is basically baked in. The question is, does Jerome Powell push back on a market that has pulled forward rate hike expectations to such a degree? Now, as for what the picture looked like in Asia overnight, it really was mixed for equities and for currencies, though bonds were largely bid across the region. In terms of equities, what underperformed was the Kospi in South Korea, down more than 1%, and Hong Kong and Chinese stocks fell as well after China's Premier Li Keqiang talked about downward pressures on the economy. You aren't seeing any growth concerns reflected in iron ore, though, at least today. Of course, iron ore prices have come down 21% over the last 5 days. This morning, though, futures actually did rise, up about 3.4%. Of course, that's giving a lift to iron-tied currencies like the Aussie dollar, which is stronger against the U.S. dollar by about 0.2%. And in the wake of the RBA decision earlier this week, we are continuing to see Australian yields coming in on the short end, down about 7 basis points on the 2-year overnight. Now, here in the U.S., we are just awaiting that Fed decision. Ahead of it, the S&P 500 is at all-time highs. This morning, though, S&P 500 futures are just slightly in negative territory, only down by about 2 points. In the bond market, we are seeing yields coming in. We're down about 2.5 basis points on the 10-year to 152, and oil coming down as well. President Biden really putting pressure on OPEC to pump more because of higher gas prices here in the U.S. So we'll see how OPEC reacts to that in its meeting tomorrow. WTI down 1.8% to 82.36 a barrel. And then just a quick check on Bitcoin, down fractionally after breaching $63,000 as of yesterday's close. Right now it is right at that level. And as for some stocks moving in pre-market trading, a big story overnight was Zillow. They are exiting the home flipping business. The company just couldn't bear those losses, and as a result, that stock down 17% before the bell. Activision Blizzard down 12% after its revenue guidance missed, and a couple of key games are going to be delayed. To the upside, though, Lyft reported revenue up 73% year on year. That stock up 13%. And a huge move for Bed Bath & Beyond, which of course is a popular meme stock, Matt. They are accelerating their buyback program. They now see that $101 billion in share repurchases happening by February. That stock up 60% before the bell.
Yeah, I thought it was interesting. They're accelerating their buyback program even though the stock price continues to go higher. So it just shows you the power that they've gotten from Wall Street Bets and the other meme stock forums. Also, the Zillow story is just unbelievable. I hope we get to talk about that a little bit later. Taking a look at what's going on in Europe, I've got the GMM here instead of a map because once again today, I just want to show you the sovereign bonds column. And we've got the opposite going on today that we had yesterday. Yesterday was all 2s and 5s. Today it's all 30s. So it's all the long end where you're seeing yields come down. These boxes are green because it means traders are buying the bonds, and that drives, of course, the yield down. So I just thought that was really interesting, especially on Fed Day right now. In terms of what's going on in the equities market, we have really little change on the indexes in Europe, but we've got a lot of individual stock stories. Novo Nordisk, right at the top, gaining more than 1% right now, beating third quarter estimates, and also saying the CEO, with whom we're going to speak in just a little bit, that their obesity drug market is expanding with my waistline. We see Ferrari also rising to a record high right now in Italy, and of course race trades on the New York Stock Exchange as well. This after raising its estimate, its full year forecast yesterday, and starting to get a couple more buy recommendations this morning. Volkswagen's still down right now, more than 3%. And I'm going to tell you a little bit later about what's going on with car makers across Europe. They have a ton of buys. I think out of 111 analysts, we have 85 buys for the likes of Volkswagen, BMW, which came out with earnings today, Daimler. So even though these car makers are doing well, and even though analysts love them, they're trading at a 50% discount on a PE valuation level to the rest of the S&P 500. And then Vestas Wind Systems cutting its forecast again. And people don't like that, obviously, decimates the stock today.
Yeah, absolutely. So that stock trades far down. Even the solutions to the climate crisis, victims of perhaps short-term climate crises, higher commodity prices, disruption in supply chains, all of that weighing on Vestas this morning. Now, a look at what lies ahead, and have we mentioned, it is Fed Day. Fed rate decision at 2 p.m. New York time. Policymakers are expected to announce that they will start scaling back their asset purchase program amid greater concern over inflation. We're watching the details, the timing, also the pushback, trying to distance this move from rate hikes. That's part of the conversation. We'll also get data out of the United States, including ADP, that private sector employment report, factory orders, and durable goods, all that coming ahead of the jobs report on Friday. And COP26, once again, front and center, and increasingly so, actually, for us, because today is Climate Finance Day. We'll speak to a variety of guests, including AstraZeneca's CEO, Pascal Soriot, also the former US President Al Gore, but a lot of focus on the role that finance can play when it comes to the pivot towards green and climate change and climate transition. We need to talk about US politics, though, Kaylee.
Yeah, international politics aside, domestically, it was a big story overnight that in Virginia, Republican Glenn Youngkin defeated Democrat Terry McAuliffe in a closely watched governor's race, a blow to President Biden and Democrats' hopes to keep control of Congress in next year's elections. Youngkin spoke after his win.
And friends, we are going to start that transformation on day one. There is no time to waste. Our kids can't wait. We work in real people time, not government time.
Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. So, Joe, we know that this wasn't just about Virginia. This race was seen as a referendum on President Biden in many ways. How bad do Democrats feel about the midterms in 2022 this morning?
Well, there's going to be a lot of picking up the pieces here this morning, and it's a question of how bad Democrats may feel if you look at this as a referendum on the Biden economic agenda. But it's also a very interesting morning for Republicans who are wondering if they just found the playbook for how to beat Democrats in the midterms while staying somewhat in line with Donald Trump but not getting too close. Was kind of the Youngkin brand here, kind of a Trump light, as Axios had called him a couple of days ago. But look, Terry McAuliffe loses by 2 points here. He was up significantly 2 months ago when we watched his numbers decline along with President Biden's approval ratings over the past 2 months with so much back and forth here in Washington on his agenda. So it's not a stretch to compare these two, but we should also note that Terry McAuliffe, in that regard, is the epitome of the establishment Democrat, closely associated with the DNC, with the Clintons, but also this race did come down to cultural issues, not so much economy and jobs, but schools, LGBTQ, critical race theory were a lot of the things we were hearing about in the final throes of this campaign. So it's going to take us a minute to pick through the pieces and really find out what resonated with voters.
Joe, you know, a lot of people here in the tri-state area, a lot of middle-class earners are paying $15,000, $20,000, $30,000 in property taxes. They would love to have assault deduction cap lifted, but Bernie Sanders is seemingly against it.
Yeah, not a big fan. This emerged late yesterday as well, that there was a potential deal to suspend the SALT cap for about 5 years as part of this reconciliation plan that is still coming together in Washington. We know as well that Alexandria Ocasio-Cortez and other progressives are not fans of this. They call it a giveaway to the rich. There had been an idea that maybe there'd be a carve-out for certain high-tax states like New Jersey, New York, California, and so on. But look, we are still quite a ways from a final product here. There's also a debate still on drug pricing going into this, and we don't know where Joe Manchin is on this entire package. So the idea of this coming together in a final version in the House, it's getting to be, Matt, a little bit boy who cried wolf. We'll get back to you when there's actual language in that bill, which, by the way, there still is not on that regard.
Well, please let us know when there is. Thank you so much to Bloomberg's Joe Matthew. And of course, you can listen to Joe every weekday on his radio program, Sound On, at 5 p.m. Eastern Time on Bloomberg Radio. But of course, it is Fed decision day. The central bank is likely to announce it will start reducing its asset purchases. And Chair Jerome Powell will probably say that the tapering is not a step toward raising interest rates anytime soon. Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us now for more. So, Mike, my question is really, is Jerome Powell going to push back on a market that now sees liftoff mid-next year?
Maybe not, because the interesting question for the Fed right now is how far do they think markets are going to go? At the moment, they're only pricing in about one move in the middle of next year, 2 or 3 more by the end of next year. Bill Dudley, the former New York Fed Bank president, is out with an opinion piece on Bloomberg Opinion this morning suggesting the Fed's going to have to do more than that. The other thing that the Fed is going to be doing is, at this point, talking about the inflation question. Does the Fed think that inflation is still transitory? And that's going to be a tough thing for Jay Powell to explain. What does transitory mean? If he goes back on that, that might send rates higher. And so he's got to be careful, but he doesn't want to say that inflation is going away anytime soon, because obviously it's not.
Okay, yeah, we'll watch that conversation closely. Will the Fed then getting out of the market or decreasingly participating in the market, I suppose we should say, will that push interest rates higher, Mike, if part of the point of being in the market was to keep them low?
All things being equal, Anna, it might, but in this case, there's something unusual happening today. We're having 2 tapers. The Fed is tapering, and market participants are expecting the Treasury to taper. The Treasury doesn't need to fund as much because, at this point, the stimulus that we got for the pandemic has started to go away, and so they're expecting them to cut back on the auction sizes. That announcement coming at 8:30 New York time this morning. And if they do, coincidentally, they just about cancel each other out. The fewer treasuries to borrow at a time when the Fed is buying fewer, and so that should leave rates unchanged.
Mike, thanks very much for joining us. Bloomberg's Michael McKee with your rundown of what you need to look out for from the Fed decision. And Bloomberg has your Fed special later on today, starting at 1:30 p.m. New York time, 5:40 p.m. here in London. Now it is Finance Day over at COP26 in Glasgow, and the attention now turns to how big finance and governments must work together to deal with climate change. The CEO of the $100 billion asset manager, 91, says climate-related disclosures should be mandatory. Hendrik Dutoit spoke with Bloomberg's Francine Lacroix earlier today.
This doesn't mean decarbonizing your portfolio today. It means helping to finance a transition that is successful and inclusive. If we stop all financing of what I would call dirty assets, other forms of finance will come in, own them, and not transition at all, and that is the risk.
Hendrik de Toit there talking to Francine earlier on. He was talking about mandatory disclosures, also there talking about what it means to sign up to these pledges around net zero. And we've had substantial names within the financial industry doing just that. Let's get to COP26 now. Bloomberg's Francine Lacroix is with us. And Francine, some incredible statistics. 40% of the world's financial assets now committing to the Paris Climate Accord. If you slice it by geography, 2/3 of global emissions now signing up to net zero commitments. What are we looking ahead to today?
Yeah, so we're expecting a lot more details on exactly what you laid out, Anna, and good morning from Glasgow, where it's pretty busy. Behind me, we just saw Rishi Sunak, the Chancellor of the Exchequer here in the UK, of course, talking about green finance, really trying to make finance the capital of, well, London, the finance capital for everything green. Now, I think the concern is, and I know there is a huge pledge from G-Finance, which is the, of course, alliance that was pushed by Mark Carney, is that the numbers are big, Anna. You laid it out. It's big. It's much bigger than it was in April, when they committed about 70 trillion. The concern is that if you look about, first of all, the scope of this, we don't know whether it's also financial assets looking at scope 3, which means that you're looking at some of the finance companies or some, for example, steel makers that are used in supply chains. And then if you look at what we had since 2015, when that Paris Accord struck, global banks have also funneled $4 trillion in oil, gas, and coal. That's almost $500 billion of that allocated this year alone. So it's unclear when we talk about the transition how you can deal with also doing a lot more with fossil fuel. And then, of course, Leo DiCaprio was here. I know Matt Miller would like him as his body double on a biography of Matt Miller. He was here.
When I had
he got through the crowds. Security let him through very easily.
When I had hair, we were indistinguishable.
He'll play Matt Miller in his 20s, from 20 to 30-year-olds. I'm kidding, Matt. He could play you now.
We all look forward to seeing that film. That sounds epic. Thanks, Francine. Thanks for bringing us the details of COP26. Bloomberg's Francine Lacroix in Glasgow. And Francine will be back with us very shortly with an interview with India's Environment Secretary. And the big news out of COP, part of it, of course, has been driven by India. So a really crucial conversation to get into. Later today, we will also bring you interviews with the CEO of AstraZeneca and the former US Vice President, Al Gore. Shares of Novo Nordisk, also worth a mention, hitting a record high as the Danish drug maker maintains its sales outlook. We'll speak to the CEO of Novo Nordisk later this hour. Plus, Simon French, chief economist Pamela Gordon, on what he expects from the Fed today. This is Bloomberg.
Crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
2030 तक भारत अपनी
By 2030, India will reduce the carbon intensity of its economy by 45%. And fifthly, by 2070, India will achieve the target of net zero emissions.
That was, of course, the Prime Minister of India, Narendra Modi, speaking about the country's pledge to reach net zero by 2070, which sounds like a long way away, but then you've got to remember how huge India's economy is and how much it actually emits. In terms of coal, they burn more than the U.S. and Europe put together. Let's get to Bloomberg's Francine Lacqua, who is in Glasgow for COP26. She's joined by India's Environment Secretary, Rameshwar Prasad Gupta. Francine, take it away.
Thank you so much, Matt. Secretary, thank you so much for joining us. A lot going on, and I have to say, when that India announcement came about net zero 2070, it really distilled the minds and reinvigorated the talks here at COP26. 2070 is a long way off. How can we be sure that India will deliver, and what are some of the medium goals that you're aiming for?
Well, as far as the delivery and the credibility of our goal of 2070 is concerned, there should be no doubt about it. You have to look at the past performance for being sure whether we will deliver or not. And it's not only us, you will have to look at others also, whether they have delivered and their promises and their goals. Do they resonate well? Do they have a credence when they say, if you look at their past performance? So, and as far as our short-term goals are concerned, they are well laid out up to 2030, which Honorable Prime Minister has put before the world.
Okay, so this was actually seen as a surprise by a lot of the delegates. What made India do this pledge, and what do you need now to make sure that this happens, even maybe quicker than expected? Is it finance, or is it something else?
Which pledge are you talking about? The net zero pledge? Or?
Net zero pledge.
Okay. See, net zero, this is something which we calculated based on what is available today and what has been the promises and how they have been fulfilled. Now, let me talk about when we discussed in Paris, we made some NDCs. Everybody made some NDCs. And even before the implementation of the Paris Agreement has started, we are talking about enhanced NDCs. So it's not that something 2070, which is today, will remain up till 2070. Yeah. It will all depend what are the kind of climate finance which is actually delivered.
Of course.
And the kind of technology and their viability, the cost of those technologies, how does it come down?
But, you know, as Environment Secretary, you're also in charge of trying to figure out exactly how, you know, the pledges, how you implement them. And this is difficult because you can say, I promise this, but then you have to go into the economy and change the way things are done.
That is right.
So what is going to be the most difficult thing that you will do in the short term, and the easiest one, the low-hanging fruit?
Probably most of the low-hanging fruits we have already exhausted. The low-hanging fruits like renewable energy without storage. We are almost on verge of about 175 gigawatts. Our electricity system, the grid, can probably no longer sustain any more renewable without storage. So we are hoping that storage technologies would be cheaper. Yeah. They would be delivered. Besides that, we are working on a number of other areas. It's hydrogen mission has been declared by Honorable Prime Minister. Then there are zero emission vehicles we are working on. There are ethanol blending in our gasoline. And there are a number of other areas which we are working. So we have a well laid out plan for reaching net zero.
Sir, when are you expecting CO2 emissions to peak? And what's the trajectory for emissions after that?
Well, we are expecting our emissions to peak somewhere around between 2040 and 45. And after that, we will be reducing the emissions and reaching the net zero.
What, a steady decline or quite a sharp decline afterwards? Is there going to be critical momentum?
It will all depend what is the kind of technologies which are available for the green development by that time in different areas, in industry, in energy, in agriculture, and a number of other areas.
Secretary, thank you so much. Environment Secretary there of India, Mr. Gupta. With that, Kaylee, I'm going to send it back to New York, and of course we'll have plenty more interviews in Glasgow from COP26.
All right, thank you so much to Bloomberg's Francine Lacqua in Glasgow with India's Minister of Environment, Forest and Climate Change Secretary. And now we should mention that Treasury Secretary Janet Yellen is speaking in Glasgow right now. We will continue to monitor her comments. In the meantime, though, let's get the first word news, everything you need to know happening outside of the business world. And a handful of fiscally conservative Democrats may sink House Speaker Nancy Pelosi's plans to vote on President Biden's economic agenda this week. The so-called Blue Dogs are echoing Democratic Senator Joe Manchin, who wants an analysis of the bill's cost and economic impact. They also want the final text of the bill posted at least 72 hours in advance so they can review it. An almost 3-week-long strike against Deere will continue. Members of the United Auto Workers Union rejected a deal with the farm machinery maker. That illustrates the growing willingness of U.S. workers to hold out for better terms. Deere's latest offer included larger pay hikes and an $8,500 signing bonus. In sports, the Atlanta Braves overcame years of frustration to win the World Series for the first time since 1995. They beat Houston 7-0 in Game 6. The Braves' Jorge Soler, who hit 3 home runs in the series, was named Most Valuable Player. And Goldman Sachs has named its biggest ever class of managing directors. There are 643 people who were promoted, an almost 40% increase from 2 years ago. Women, though, accounted for fewer than 1 in 3 of the promotions. And Matt, I know you were really excited about the story this morning.
Well, I mean, it's just that they have a huge class, and a lot of them are just 10 years out of college, right? Or 11 years, I think, out of college is the younger end of the spectrum there. So it's interesting, and at least people are going to make a lot of money. Masters of the universe.
And Anna, they already are making a lot of money.
I'm sure, yes.
Yeah,
yes.
Somebody has to. Coming up on the program, Simon French, chief economist at Panmure Gordon, will get his thoughts on the Fed. It's a big week, of course, with the Fed decision looming large on our agenda today. We're in Glasgow for COP26. We're also covering the Fed. Of course, we'll have plenty of analysis of that decision as it breaks later on. And guys, my particular focus is the amount of distance, and Matt, I know you've been following this as well, that the Fed will try to put between the tapering timeline and the market's assumptions about rate hikes. Because we've heard from the Fed in the past that they've been trying to put that distance in place.
Yeah, absolutely. And it's interesting that the market is now pricing in more than 1 rate hike. Bloomberg Intelligence is actually expecting 2 rate hikes by the end of 2022 for the Fed, and we've seen rates at the short end really come down. So come up as investors sell off that debt. So it'll be interesting to see what the Fed actually does, how aggressive Jerome Powell actually is.
Yeah, and of course, this follows Christine Lagarde last week that really didn't push back all that hard on the market. When asked if the market was getting misaligned with what the ECB is actually going to do, she just said, it's not for me to say. So do we hear Jerome Powell say it's not for him to say, or does he take a firmer stance in his press conference?
Yeah, does he do something more like the RBA that said the market pricing had become disconnected? More on the Fed soon. This is Bloomberg.
Проходим опасный участок, ответственный. Устам поднимает тебя на жмаре. Шерпа страхует.
Очень много думал о том, что я сделал, и понял, что сделай какую-то нереальную вещь. Не знаю. Я до конца как бы внутри себя даже не могу поверить, что я через это прошел. Состояние, наверное, организм истощен, потому что очень много физической работы. Своим вот этим поступком я хотел сказать, что только через действие в этой жизни достичь можно абсолютно всего.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And usually about this time of day, Matt, I say something of passing interest about the equity markets, but all you hear is blah, 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 because you're focused on bond markets. What are you thinking about this morning, Matt?
Well, actually, I'm thinking about bond markets this morning as well, just watching where we see the gains and the volatility. I'm going to show you a chart in just a minute that's I think very interesting, and hopefully for our guests it's interesting as well. But the overarching theme, I think, in terms of the bond markets and central banks is that the market is the tail wagging the dog here, in a sense. The market is in control pretty firmly and has been, you know, since the taper tantrum. No central bank wants to repeat that, but I wonder if that's a good thing. I think, you know, Ben Rahm on the MY blog this morning is arguing that the kind of two-way risk is missing here, and that's not great for markets.
Yeah, absolutely. Yeah, Ben Rahm reading his piece this morning about who's leading whom. An interesting conversation, especially on Fed Day. Just getting some breaking news coming through around the UK economy. UK October services PMI, 59.1 against an estimate of 58, so better than anticipated. Well above the 50 level, so the economy continues to expand, continues to recover from the earlier lockdowns earlier on this month. The pound spiking just a little bit this morning against the US dollar, so a spike on cable. Kaylee, what are you watching this morning?
Well, maybe some further progress in the British economy, Anna. And the U.S. economy, too, has made further progress, substantial further progress, some might say, which is the Fed's criteria for beginning tapering. And it's all but baked in, basically, that the Fed is going to announce it today. The question really is around the Fed's ability to separate the taper from eventual rate liftoff, because the market has pulled forward its expectations for rate hikes. They now see that happening in mid-2022. How does Jerome Powell dance around that in his press conference today? That is my question. And ahead of that, we go basically nowhere in the equity market. We are flat on both the Stock 600 in Europe and when it comes to S&P 500 futures here in the U.S. A bit more action in the bond market, as Matt Miller is aware of. We're down about 2.5 basis points on the 10-year Treasury yield to 152. And oil, also a really interesting story today. President Biden pushing OPEC to produce more. Does that run counter to the goals of COP26? Maybe, but he's very focused on higher gas prices here in the U.S. So OPEC, of course, will be meeting tomorrow, and they'll probably have to discuss that. Oil down 1.7% today. As for some stocks moving in pre-market trading, a big surprise for Lyft overnight. 73% gain in revenue year on year. Those shares up 13% and giving a nice lift to Uber, which reports tomorrow. Those shares up 6%. And elsewhere in the car space, Avis Budget, the rental company, was the stock story of yesterday. The company saying it does eventually plan to buy more electric vehicles, and meme traders bid up the stock 108%. It's coming a bit more down to earth today, though, down about 4.5% in pre-market trading. And there's still questions surrounding the Tesla deal with another rental company, Hertz. Matt, of course, Tesla fell 3% on that yesterday, and it's lower by another 1% before the bell this morning.
Yeah, you know, I have an interesting correlation between the car space and the bond space. I've got a chart here that shows the U.S. two-year yield, and it retreated Tuesday after spiking the day before. In fact, you can see big jumps and big drops here, but the whole chart, which goes back about 2 years, kind of reminds me of this piece of art I have at home. It's a physical representation of a sound wave from a Lamborghini Aventador going 0 to 100. And the point is, it just gets bigger and bigger at the end, which I think shows a lot of volatility in this market. Simon French joins us from Panmure Gordon, where he's the chief economist. And I wonder what you make of this real pickup in volatility in fixed income when we seem to have none in equities, Simon.
Yeah, good morning, Matt. I'm disappointed we can't talk about your Lamborghini, but we're going to have to talk about the bond market, aren't we? And I think you're absolutely right in terms of it's the tail wagging the dog at the moment. Whatever narrative central bankers are putting out there, which is where the equity market believes the outcome is going to be, that they're going to be very gradual. They're going to look for an overinflated burden of proof before raising interest rates or tapering at a more rapid expectation than the market. But the bond market's not listening. And to some extent, I think we do need to be mindful that there's an awful lot of positioning here which is unwinding. And these may not be as pure reads of actually central bank intentions as they may historically be. I thought in Katie's introduction, she's talking about the Avis share price move. Why is that relevant? Well, it just shows you quite how extreme some of the sentiment of positioning is. And it might not be that the bond market is giving us pure signals that we've been historically used to.
Okay, important to make that point then, Simon. Good morning to you. So when we look ahead to the Fed today, a lot of people saying we're going to hear more pushback from Jerome Powell around any attempt by the market to link what we hear today around tapering to rate hikes. And I wonder how you view that sort of conceptually with your economics background, Simon, how that sits with you. Do you say, okay, yeah, sure, there is no link, or do you say, come on, there is a link between the two? So how do you approach this?
Well, I think conceptually we can try and acknowledge that sufficient progress to start tapering, a loosening of financial conditions based on the repair of the overall economy is the threshold level chosen by the FOMC to begin the tapering process, which I expect them to do over the next 6 or 7 months down to zero net purchases by the middle of the year. But they've set a very different set of criteria of maximum employment for starting to increase the Fed funds rate. Now, even with the US economy 5 million jobs light, and I think if you take into account where I think participation will go, it's probably close to 8 or 9 million jobs light. We're not going to get there by the middle of the year unless we have an exceptional pickup in the rate of hiring. And I just don't think that is going to happen. And therefore, I actually think it's, although we'll see a big change in the type of language being used by the FOMC, I think the reinforcing of the, if you like, the air pocket that will exist between the end of tapering and the start of Fed.
Well, Simon, on the subject,
will be perhaps the principal of today.
On the subject of what maximum employment is, does the Fed not need to rethink about that, given that participation looks like it may just be structurally lower post-pandemic?
Well, if it does think that, I happen to disagree with them. And I think there is enough of a difference of opinion out there on where US participation is post-pandemic for the Fed to be very, very patient. I think if you look at the last few years of the Trump administration, US participation started to pick up. Is it still weak, particularly amongst those aged 50 plus post-pandemic? Yes, because of fears over health. But as the pandemic eases, will you see those people come back in the trend that we saw at the back end of the Trump presidency? I think that's very plausible. Janet Yellen in the Treasury will be very mindful that she was on the Federal Reserve when that participation rate inflected from what was previously a 2-decade decline. I think anybody who speaks too confidently, they know exactly where participation rate is and therefore know the criteria best part of 12 months out for liftoff. It's probably fooling themselves.
I just can't see, how is this not full employment? We have worker shortages and jumps in wages to the point where dear workers poo-poo a 10% increase, an $8,500 bonus, and raise guarantees of raises further out. If this isn't full employment, what kind of inflation would full employment be leading to?
Well, Matt, I slightly challenge your surprise here. I mean, people are, particularly older workers, worried about their health outcomes. Even if it's not having been largely double jabbed, an acute health risk, there is a scarring effect from the pandemic, which has changed the participation rate. rate of that cohort. And therefore, when you start to see those people come back into the labour market, you will see a supply boost, and some of the constraints that have led to, and we have to acknowledge it's pockets within the labour market, but pockets of skills, pockets of geography, not broad brush, those will start to ease. And I do think that that is the real threshold test, particularly for the FOMC members with a strong labour market background who want to see higher employment rates amongst minorities, the type of US worker who has really struggled in the last 20, 30 years. This wants to be an administration on both the monetary fiscal side that reverses that long-term decline.
Simon, thanks very much. Thanks for joining us. Good to speak to you. Simon French of Panmure Gordon. Coming up on this programme, we'll speak to the CEO of the Danish drug maker Novo Nordisk about their earnings and the future of obesity drugs. This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Harmeet Singh is spearheading Levi's investments in innovation.
As CFO, the one important thing is to ensure you're able to connect the dots and always think longer term.
Watch the world premiere of Chief Future Officer this Wednesday on Bloomberg.
We've really started to see climate risk becoming a key prudential risk as identified by our regulators.
There's a lot of pressure on banks because our clients are demanding this. Our investors are demanding this. The politicians, the world's demanding this.
The money is waiting on the street surface for us in order to pick it up and put it to green projects.
There's lots of opportunity for making sure that green finance actually happens as fast as possible.
All of this ambition is going to collide with a system that's unable to absorb it unless these companies are given the tools they need to succeed.
Alignment of global standards, I think, is going to be key. I think both for banks that stand willing and able to actually finance this transition, but also really for clients.
As we underwrite them, one of the risks we're underwriting is, do they have a plan that meets the standards that the world wants them to have? And if they don't, they're going to have a problem financially down the road, and that's how we do it.
Bloomberg speaking with top executives on climate financing and the pressures and challenges ahead. Matt and Kayleigh, we've heard plenty of voices earlier on this morning coming to us from COP26. Francine Lacroix bringing us a lot of those really great interviews. One that struck me as really interesting is, what does it mean if you're a financial manager, if you're one of these managers that runs $140 trillion worth of money that's now been signed up to net zero or Paris-related commitments? What does that really mean? Well, crucially, it doesn't mean that you will divest from fossil fuels immediately. That's what we heard from one of the money managers that has invested here, because he argues, that's something that would that would mean that we wouldn't actually get to net zero. It would be sort of self-defeating. But that's just one of the lines coming out, Kayleigh, then from COP26.
Yeah, it's all about the transition. It's not a sudden turnoff of investing in traditional energy sources. You kind of have to transition to green. The question is, how quickly can we make that happen, especially given the energy crunch that is happening in so many parts of the world, Anna?
Okay, let's get back to some of the corporate news flow this morning. The Danish drug developer Novo Nordisk raised its 2021 outlook and expanded its share buyback program when the company reported its third quarter results today. Its results were boosted by demand for its new diabetes and obesity drugs. I'm pleased to say that joining us now, Lars Jorgensen, the Novo Nordisk CEO. Lars, really nice to speak to you. So quite an expression of confidence, upgrading your guidance, increasing cash returns to shareholders. What makes you so confident that you can make those moves?
Thanks for having me. We are seeing a very, very strong momentum in our business right now. We are launching a number of innovative products based on this new drug category called GLP-1. And we see very strong momentum both in diabetes care, but now also in obesity. And there's a lot of focus on obesity being a leading cause of a number of other comorbidities linked to COVID-19, etc. So we really see that the obesity market is taking up for this particular drug category.
What can you tell us about the Wegovy obesity drug bottlenecks, and who is eligible for this kind of drug? Can it get rid of a double chin, for example?
Yeah, so you are right in alluding to that we saw a very, very strong uptake. Actually, one of the strongest uptakes we have seen among all our products being launched and also in the industry comparing to other launches. So a really, really strong uptake, and that has led to some bottlenecks in our short-term supply chain. We're ramping that up, so we expect that come beginning of the next year, we can supply fully in the U.S. market where we are launched so far. We've worked a lot with the payers in the U.S., the so-called pharmacy benefit managers, and we are pleased that now all of the 3 big pharmacy benefit managers are actually having Wegovy on the formulary. So now we have to go out and go to the employers to make them opt in on these formularies and really get the product to the patients.
But what patients? I mean, is this a lifestyle thing? Can I take it to lose the 20 pounds I want to get rid of? Or is it a disease medication where only people who are morbidly obese and truly at risk of serious disease need to take it?
Yeah, so this obesity should be seen as a disease, and in the US it is acknowledged as a disease. And this product is approved not for lifestyle, but for really people in need of care. So those are patients with a BMI, a body mass index of 30 or above, or typically a slightly lower BMI, but with comorbidities like cardiovascular disease. So this is for the medical purpose of treating obesity. And there's potential for losing some 17 to 18% weight. And that brings a lot of health benefits and potentially prevention of diabetes, cardiovascular disease, and a number of cancers.
Lars, about 40% of your revenue comes from the United States. And here in the U.S., there is a debate about drug pricing taking place right now with legislators on Capitol Hill. Are you worried at all about that kind of regulatory concern when you market your drugs here in the States?
You're right, U.S. is a key market for us. It has actually been growing or going down in importance. It used to be more of a, say, 50-50 split between U.S. and ex-U.S. We see that ex-U.S. has been growing faster. We see that there are a number of challenges in the U.S. healthcare system. A lot of patients ending up having high out-of-pocket cost. We are focusing on those patients, so we welcome reform that will help patients at the counter of the pharmacy and taking away their burden, which is largely caused by design of insurance. Today, we are actually having a lot of support programs helping those patients. So if you fall between the cracks of the healthcare systems, we are actually picking up the bill for some of these patients. Any reform that can help patients, we support.
Can I ask you about margin expansion? I was reading some research, Lars, about your business from Citi that said the scope for further margin expansion was underappreciated. If that is the case, if the market does not appreciate your ability to expand margins there, where is that going to come from? Is it here? Is it this drug? Where?
So we see a shift from being focused on insulins to increasingly, while keeping the insulin business, building a higher margin GLP-1 based business. So there is a positive there. At the same time, we are investing more in R&D, so that will drag down our margin. So we are not guiding towards really margin expansion because we already operate at a relative high margin compared to the industry. So we are investing in the business to secure long-term growth, also beyond the area of the products we are launching right now. And we invest in that because of the one products.
Thank you. So, apologies. Thanks so much for joining us. Great to speak to you. Lars Jorgensen, the Novo Nordisk CEO, speaking there about the growth potential for the business. Coming up in the next hour, more on pharmaceuticals with the CEO of AstraZeneca, Pascal Soriot, joins the team. That's at 6 a.m. in New York, 10 a.m. in London. This is Bloomberg.
The past 18 months have reminded us how essential the PC is to work, life, learning, and connecting. And with Windows 11, we have renewed sense of the role Windows plays in the world. It offers personal agency and real choice to users.
Just finishing what you were saying, Tom. November 3rd is when the decision is. Just in case people got confused, I will. Just one more story, Tom.
Yeah, thank God for that.
We're at 1:37 right now.
Wrap it
into
up.
Weakness. Is this where they play the music and the Academy Awards? Is this it? Do I thank my mum again? Are you in charge of this?
Is she the only one?
Kill the music. You know who's in charge here.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons over in New York. Also in New York, Tom Keane, co-anchor of Bloomberg Surveillance in the hour that follows this one, of course. Tom, just adjusting his tie, has to be perfect. Good morning to you. I'm always impressed with the number of things that you can inflation adjust, Tom, and you have another one for us this morning.
Well, it's the mathiness of the Bloomberg. You can do this, folks. If you have a Bloomberg, the CIX function is one of the quiet jewels of the Bloomberg, like Anna Edwards. Let's go to it. Real wheat, inflation-adjusted wheat. This goes back to the French Revolution, and the flour wars. When wheat spikes, people get upset. Here's the key number, Anna, 34%. And the exit poll in the Virginia elections last night said the economy is a #1 issue, and the #1 issue in the economy is inflation, which is not transitory when you're buying wheat. We've had a long-term disinflation in wheat over 40 years, but you know what? It's a spike up back to the expensive wheat of the early 1990s.
You know, I can do you one better than that. The NBER released a survey looking at the inflation for James Bond's expense account. I don't know if you saw this, Tom, but they look back at his original salary from Ian Fleming's first book, I think in 1953. He got £1,500 a year, and he spent about 18%, according to the restaurants that he went to, most of the Michelin star restaurants in France. He spent about 18% of his salary on his meals, and they fast forwarded past the introduction of the euro. Now he spends 26% of his salary on his meals.
Yeah, that's kind of the food expense that's out there. That goes to the great Keen Vesper Index, which comes off of Goldfinger, which is, of course, the calculated formula for a Vesper when Anna Edwards and I have won in the Lalique Lounge at Claridge's. And, you know, it's gotten more expensive.
If James Bond can't afford nice meals, there's no hope for any of us, Tom. Let's go back to my home state of Virginia.
Yes.
I know why I think it matters, but why does Virginia's result from overnight matter so much?
Well, they matter, but I agree with Greg Vallier publishing moments ago that the real shocker in the language of Vallier is New Jersey. I'm sorry. But Kaylee, very quickly here on Virginia, to me, was it more that the Republicans turned out for the Republican or the Democrats didn't turn out for the Democrat? Which do you see so far?
I think it's the Democrats not turning out for the Democrats. Remember, Biden won Virginia by 10 points. Over a margin of 10 points over Trump, and you just didn't see that fire under the belly on the Democratic side, I think, this time around, so maybe doesn't bode quite so well for the midterms. Thank you so much, Tom Keene, co-anchor of Bloomberg Surveillance. Tom, of course, will be on in the next hour with guests including the AstraZeneca CEO. Now for a look at what else we're watching today. It is all about the Fed for me today, Anna and Matt. Tapering's all but baked in. That's not really the question. The question is really going to come from Jerome Powell at the press conference. Does he or does he not push back on a market that now sees liftoff in mid-2022? Because, of course, Jerome Powell has tried really, really hard to separate the taper from liftoff, but those market pressures, they are ever present, Matt.
Yeah, absolutely. We'll all be watching very closely. And the question of the day on the MLive blog was, how aggressive is he? We're all looking for the answer from Jerome Powell. I'm watching the car makers, especially in Europe. Analysts just can't get enough. I talked about this at the top of the program. Out of 111 recommendations of the region's 4 biggest auto firms, which is Volkswagen, BMW, Daimler, and Stellantis, considered a European automaker, not one of the big 3 out of Detroit, 85 are looking at buy recommendations. Even after a 6.5% bounce in October, autos trade at a 50% price earnings discount to the stock 600, which I was saying earlier. So you can see here the discount. It's lower than it has been, even lower than it was pre-pandemic. So you could see more of a bounce for the car makers.
Yeah, nice long-term valuation chart there on the car sector. I'm watching, once again, events over in Glasgow. I'm closer to it geographically, so figure it's my job too. We're watching Mark Carney. He's been leading that pledge from the financial industry, unveiling $130 trillion. Shall I say that again? It's such a big number. $130 trillion in climate finance commitments. So the money managers that manage that much money now committing to Paris goals, which seems fairly significant. We'll have more, we'll expect more from Glasgow as we go through the next hours of programming. More Bloomberg surveillance ahead. This is Bloomberg.
Stress is there at the moment amongst the asset managers that actually some of the ESG labeled products, then if you probe, are not green?
Well, look, there is some stress, and it's great that there's that scrutiny, and there's that skepticism or healthy skepticism about ESG labels or sustainable labels. And that, again, is one of the reasons we're having this ruthless, relentless focus on net zero, because in the end, look, we can't stabilize the climate unless we get to net zero. And it's a simple, these are hard numbers. Your emissions are either A or B, they're going up or down. And if they're going down, are they going down consistent with the science? We anchor it in the science, the same science the UN and others use for the 1.5 degree objectives.
Should this not be compulsory? Should we not have regulators coming in and saying, look, this is a new definition, you stick by it, and we're going to measure it?
So I think it's a great question. So let's look at what happened with TCFD, climate disclosure. 6 years ago, you and I were in Paris. We talked about this. We talked of other things. Now that's moving to become mandatory.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
You talk about hiring aggressively at the moment. Can you walk me through how challenging that is at the moment? How difficult is it to find the right people?
Well, things have changed. Again, the world has changed under the pandemic, and you all know worldwide, you know, what the challenges with getting people back into the workforce.
Has the luxury of being the first mover.
The market doesn't own the definition of transitory. The Fed owns the definition of transitory.
The Fed has made sure to communicate their stance because they know the impact on the equity market.
The wage picture, the labor market picture right now does not scream hike now.
The Fed is not trying to kill the expansion. They're trying to extend it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is Fed Decision Day from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market dead flat unchanged on the S&P 500 after 4 days of gains and another all-time high. TK, the Fed, just around the corner.
Well, the Fed just around the corner. That's going to be the focus today with that equity market. We've got great equity guests, folks. Abby Joseph Cohen will join us later. John, we got to get Abby Joseph Cohen to say S&P 51 or 5,200.
Just to go through 5K,
she's just got to get past David Costin. But what we got to get past, John, the Fed meeting on the jobs day, Michael McKee to come on with ADP, and then we got to do a little bit of politics as well.
Abby's with us at 7:30 Eastern time. Looking forward to that, Tom. Let's talk about the politics. The narrative this morning, a simple term, Tom, massive overreach.
I didn't get much sleep, and I expected to get the surveillance beauty rest. John, this was exciting through the night, and as Greg Valliere mentions moments ago, the shocker is New Jersey. Yes, in Virginia, the Democrats, they are transitory. The Republican will win. But in New Jersey, right now I'm looking 88%. Thank you, New York Times. 88% and the Republican is exactly 1,200 votes ahead of the Democrat. That is a shocker.
Too close to call. Lisa, did Senator Manchin just get a little bit more leverage overnight?
That's what I'm wondering. How much does this actually push the moderates and getting more clout when they talk about the negotiations and, frankly, getting the headline number down when it comes to the human infrastructure plan? Does this make a plan more likely?
We'll head down to Washington in about 10 or 15 minutes' time. Let's start with the price action this morning. There is a calm in this equity market. 4 days of gains, all-time highs on the S&P 500. Since the Fed last met, Tom, the S&P's up 5%. We've had a big move, not just in rates, but in the equity market too.
Maybe the NASDAQ as well. But, John, I want to just point out, yesterday afternoon, we had a nice pop off the pop in the morning, and the VIX came in very nicely. The VIX gave you a real bullish tone yesterday.
Yields in too, Tom, on 2s yesterday, on 10s this morning, down 2 basis points to 152.43. And, Lisa, let's talk about it. OPEC plus. Yeah. The U.S. piling on the pressure, crude back down to 82.34.
And this basically is a potential ultimatum, and a lot of the tea leaves seem to say that if the U.S. doesn't get what they want and OPEC Plus does not increase production, that the U.S. and other nations could release some of their strategic reserves of oil to offset some of the price increases.
John, that's in Lisa's living room.
Yeah, that's correct, except my children are a little bit concerned about the fumes. All right, let's talk about what we have to expect coming up today. 8:15 a.m., we get the U.S. October October ADP employment change. There's a big question about how predictive this is for the payrolls report that we get on Friday. What I will be watching is any clues as to whether the participation rate is continuing to fall, because we have seen it roll over and remain really subdued versus the pre-pandemic levels. Also very curious to see whether we get any inclination as to how much wages are increasing. We've seen wages increase by at least the employment cost index at the fastest pace going back to ever. Although, of course, some people do contest that. 8:30 a.m., this might be the most underplayed aspect of the day. The Treasury is planning to release the quarterly refunding announcement, the potential first decline in total debt sales for the United States going back to the direct aftermath of the 2008 credit crisis. How much does this offset any tapering that the Fed announces today? The trade balance is at basically a record deficit. How much does that actually come back as the U.S. actually is less indebted? And at 2 p.m., we get that Fed decision, followed by Fed Chair Jay Powell's press conference. The two-year yields have actually softened following the RBA's decision, basically having a more dovish stance, even though they did allow yield curve control to fall into the wayside. I'm looking at how much they push back into the 2.5 rate hikes, that are being priced into the market by early 2023, John.
That's the number one question, Lisa, and right now we're getting some pushback from the ECB President Christine Lagarde saying the following: we do not see the conditions for a rate hike to be met next year. Conditions for a rate hike unlikely to be met next year. Tom Keene, the Italian 10-year yield, highs of the year on Monday through 120. Right now, yields in again, down 4 basis points or so. We've got another move on the Italian 10-year yields lower, Tom, and a bit of pushback from President Lagarde after some people asked questions about last week, perhaps not pushing back enough.
Into the leaderless Bundesbank, you've got the German 10-year yield, that big negative yield, and granted it's gone from negative 0.50 to negative 0.10. John, almost a positive. Germany 10 years sitting right on support right now at a negative 0.20 level.
Just above 1% on Italian 10s. Yields coming in by around about 4 basis points. The German 10-year, negative 19 basis points, Tom, as you indicated. Let's bring in Alan Ruskin, shall we? Chief International Strategist at Deutsche Bank. Alan, the ECB to one side. Let's start with the Federal Reserve. What are you looking for, sir, a little bit later?
Yeah, it looks like a boring one. I think the Federal Reserve has done an outstanding job here in pre-signaling to the market that, one, we will get a taper. Two, that the taper should end by the middle of the year. That means probably that they'll do 10 billion a month of tapering on treasuries, 5 billion a month on MBS. They will talk, I think, a little bit about the rate story, but it'll be pushback there in terms of, we'll first do the taper. It's too early to talk about rates, really, rates going higher. We'll mention inflation. I think the word transitory will get ditched probably in the statement. I think they'll accept that, yes, inflation, or talk at least, that inflation will be coming down, but I think they'll be pushing back on the idea that, this is all the forces are transitory. And then on the growth side, I think there'll be general optimism still. So those are the 4 main elements we'll be looking for.
Alan, boring is exactly what Fed Chair Jay Powell would like to see, especially as he announces a taper. And yet, as you pointed out, credit cycles end usually in tiers, often with a Fed policy rate error. How much are we potentially risking that here, or has the Fed basically taken that off the table with their incredibly dovish stance?
No, look, I think there's some very big risks on a, I would say at least multi-quarter, probably multi-year view. But I think what's particularly interesting in this cycle is that asset prices are highly inflated. And you look at any sort of valuation metric for equities, and you look at housing in particular. That being said, I've never seen a cycle where the household has not participated in terms of a credit binge. This has all been a binge at the public sector level. It's all ended up, all the risk is showing up essentially on the Fed's balance sheets. And so I think there's much less risk of a corrective action from the household sector. And I think the household sector could actually withstand interest rate hikes. I think there's much more resilience there. The household sector, just as an example here, the household sector has roughly $2.5 trillion more in savings than they would have had without COVID. They've got roughly about $5 trillion more of money, M2 money balances than they would have had. They've got about $20 trillion more worth of net wealth. So the household sector, I think, is actually pretty resilient, even in the face of these what look like very frothy asset prices.
Alan Ruskin, to channel Ralph Edwards, Anna Edwards' grandfather, in his show Truth or Consequences from the early 1950s, if the Fed speaks truth, there will be consequences. What will be the market reaction if Chairman Powell gets his way to a modernity, to a lack of dynamic move? What happens if the Fed's successful here to the markets?
Well, fantastic, and all hats off to the Federal Reserve. I think if this inflation issue does look like it does turn out to be transitory, then I think we've dodged a bullet. I think we've got more upward inflation forces here than I've seen in any time in the last 40 years. And so there are greater challenges ahead. But if the Fed gets this right, then the Fed will come out with even more credibility. And I guess the markets will actually back the Fed even more. And that means even more asset inflation.
Alan, before you run, let's get a market call. Where are you on the FX market right now?
Yeah, I think, look, it's very range-bound. I think euro-dollar is, going to test the 115 level. If we break that level, I think we can accelerate a little bit to the downside. But for now, I think it's pretty sideways, moderately dollar positive.
Alan, thank you, sir. Alan Ruskin there of Deutsche Bank. Remarkable, isn't it, Tom, that we can have a guest who talks about some of the strongest things they've seen in about 40 years, and then the FX call off the back of it. It's pretty tame.
Yeah, the tame is the key issue here. I heard a real lack of dynamics and fear from Alan Ruskin. And John, again, the key word there, and it's way overused. I'm embarrassed to use it, but here we go. John, resiliency due to savings. Is that calculated in by market participants?
Consumer balance sheets, Tom, household balance sheets.
Exactly.
Are pretty resilient, really strong. Corporations, Tom, the resilience of corporate America. That's been a thing for you this year. This equity market record highs reflecting that.
I had my third beverage of my choice last night watching the election results. And John, this is really important. When do we start seeing an Abramowitz-like tranche of corporate paper come out where, Faro Amalgamated comes out with like $7 billion
and no one wants to
tranche.
take it down, Tom.
Yeah, I mean,
it's too gloomy.
They have to pull back on the size of that offering, Lisa, and offer a little bit more premium.
Look, I just really want to underscore what Alan Ruskin was saying, because it's really a similar argument to what Bill Dudley, a former New York Fed president, made in a Bloomberg opinion piece this morning. There is more room for the Fed to raise rates than many people in the markets are aware of. This goes to the household debt levels, which are low, and the corporations that have locked in fixed rates that are low for a very long time, John.
You almost sounded bullish then again, Lisa.
I mean, bullish, bearish, I'm trying to see things the way they are.
Of course, just sometimes with a negative lean. Often.
It's genetic, I'm sorry.
Lisa, just a final one on the preset course of tapering. We know that's going to get announced a little bit later. Will it be preset? Will it be on autopilot? I don't think we can quickly move on straight to rates and have this conversation about the what next. We've got to focus on that too.
Yes, absolutely. I think, though, that there is no reason for Fed Chair Jay Powell to push back against rate hikes that are being priced into the market. I'm hearing that from strategist after strategist. What that means for policy is still unclear.
Do they drop the T word?
Yes.
DK?
Yeah.
You think it goes, Lisa?
I don't know.
You think it goes?
John,
okay.
did you think Abramowitz there was well said?
I think it was well said. I think it was very
well said.
Bramo.
What did I do?
Well
what do you want?
Just for a moment, you weren't doom and gloom. Just for a moment.
Equity futures down 2. We're negative 0.05%. It's all-time highs into Wednesday. It's Fed Decision Day from New York on radio, on TV. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. It's a blow to President Biden and Democrats' hopes of keeping control of Congress in next year's elections. In Virginia, Republican Glenn Youngkin defeated Democrat Terry McAuliffe in the closely watched governor's race. Youngkin was backed by former President Trump, and a year ago, Joe Biden won Virginia by 10 percentage points. A handful of fiscally conservative Democrats may sink House Speaker Nancy Pelosi's plans to vote on President Biden's economic agenda this week. The so-called Blue Dogs are echoing Democratic Senator Joe Manchin, who wants an analysis of the tax and spending bill's cost and economic impact. They also want the final text of the bill posted at least 72 hours in advance so they can review it. At the end of the Federal Reserve's policy meeting today, the central bank is likely to announce it will start reducing its asset purchases. And Chair Jerome Powell will probably say that the tapering is not a step towards raising rates anytime soon. Policymakers may also tweak their statement to reflect more concern on inflation. Hong Kong is in final talks with Chinese officials about reopening their shared border. That's according to local news media reports. It would be a major breakthrough on reviving travel exchanges that are crucial to Hong Kong's economy. Discussions are said to be focused on whether Hong Kong will adopt the mainland's health code system that classifies people as green, yellow, or red. And in sports, the Atlanta Braves overcame years of frustration to win the World Series for the first time since 1995. They beat Houston 7-0 in Game 6. The Braves' Jorge Soler, who hit 3 home runs in the series, was named Most Valuable Player. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Day one, we're going to work. We're going to press forward with a curriculum that includes listening to parents' input, a curriculum that allows our children to run as fast as they can, teaching them how to think. We will reduce our cost of living. On day one, we will declare the largest tax refund in the history of Virginia.
Glenn Youngkin making it happen down in Virginia. From New York City this morning, good morning. Tom Keene, Lisa Abramowitz and Jonathan Ferro, your equity market, all-time highs on a 4-day winning streak into Wednesday. It is Fed decision day here on Bloomberg Surveillance. Equity futures down 2. We're negative 0.05%. In the bond market, yields in down 2 basis points at 152.61. In foreign exchange, euro dollar not doing much, 115.83. And this government, this administration piling the pressure on OPEC. Will OPEC fold? 82.16 on WTI, negative 2%. Tom, this country calling it a wake-up call for the Democrats for 22.
Well, there's no question about it, and the data is still coming in. I really want to emphasize, folks, that this election is by no means summarized, which means it's totally fair to trash on Joe Matthew right now. We'll do that, our Bloomberg Washington correspondent. Joe, I want to immediately go from Virginia, we can talk about that all through the week, to New Jersey, which to me is a stunning reversal for Democrats. That is still undecided, neck and neck. Chattarelli and Murphy right now in New Jersey. What kind of liberal lost last night, Joe Matthew?
Well, it's interesting. By the way, keep in mind that early voting, mail-in ballots still being counted could, in fact, keep the incumbent in office here. Shades of Scott Brown this morning. Remember,
go there, please.
Well, listen, that was right in the middle of the debate around Obamacare when he shocked the nation with that win in Massachusetts. People said Obamacare was dead. Remember, that was the people's seat. Here we are in the throes of this reconciliation debate, and the earth is shifting a little bit under our feet. Now, I will also remind you, Christine Todd Whitman and Chris Christie both won at this point, 1 year into Bill Clinton and Barack Obama's terms, this very same period of time for Joe Biden. So, you know, you could argue we've seen this movie before, but I'm focused on the relative strength of Democrats in these 2 states that Joe Biden won easily, 16 percentage points in New Jersey, and we don't know who's going to win this until the early voting ballots are counted. I think Mr. Chattarelli said it very well, by the way. He said last night, every single time this state has gone off track, the people of this state have pushed, pulled, and prodded it right back to where it needs to be, and that could be a national narrative for Republicans.
I want to go beneath the headline data, Joe Matthew, and we can do that with you, and it could be the new mayor of Boston as well, but I want to summarize that what I saw nationwide was a reaffirmation of some form of traditional police force within Democratic politics as well. How big a deal is that, or is that just noise on the sideline?
If you mean literally police reform, it's a big deal. Look, the defund the police moniker has not resonated. And even Michelle Wu, who you mentioned in Boston, is not calling to defund the police, rather move some money around here. Take a look at what happened in Minneapolis, that ballot question to essentially get rid of the police force and replace it with a public safety agency. did not go anywhere. And of course, we saw crime as the #1 issue in the mayoral election in New York. Is this a reckoning? I don't know. It could be more of a reset for Democrats as they try to figure out how to take this path in the midterms. And the same goes for Republicans.
Yeah.
Did Glenn Youngkin just find the secret sauce to beat Democrats in the midterms as sort of a Trump light, as Axios called him? You know, tastes great, less filling, beats Democrats. Not too far, but not too close to Trump, the Goldilocks moment. This is what we're going to be digging through the results, trying to figure out this morning.
But this is exactly the question I was going to ask, Joe. Tom opened up the segment saying, what kind of Democrat won? What kind of Republican won? Is this the Trumpian party, or is this something new?
Well, it's something new. It's something kind of in between. As I said, it's kind of this Goldilocks scenario. You have to remember, though, New Jersey and Virginia were pretty different races. They both were keying off of national politics. But in Virginia, where I live, right across the Potomac River here from Washington, D.C., it really came down to cultural issues. We spent time hearing about critical race theory, about gender assignment in bathrooms, about parents' choice in their students' curriculum. It wasn't the old, it's the economy stupid in COVID. We were talking about different issues down here, and Donald Trump, by the way, was issuing full-throated endorsements of Glenn Youngkin, who never appeared with him. He was very careful about the way he used that support, and it worked.
Joe, you're a student of the trends of this nation as well. And I want to talk about Mayor Wu, a Harvard graduate who started out basically with nothing. She's going to wander over to Southie to Emerson Street, and she's going to have a cold one at Tom English's cottage. Is that feasible?
It's not the Boston that you're used to. It's not even one that I am entirely used to, having just moved from there less than a year ago. This is a city that has changed. Anissa Essaybi-George, her challenger, lost pretty badly in this election, and she was essentially the clone of Marty Walsh.
Exactly.
But imagine Michelle Wu, a 36-year-old who's making history here in this race. It's kind of amazing. It's the first time in 100 years a white Irishman isn't in the corner office.
Just beautifully explained. John Farrell, I can't state enough how this is a microcosm of what's happening to this nation, region to region, city to city. There's some amazing dynamics here.
Joe, we've got to say thank you. Let's catch up soon. Joe Matthew there.
Indeed.
Down in D.C. on the latest. Tom, there's so much to talk about. I think what we need to focus on and what it means for policy. Senator Manchin waking up this morning, does he have a spring in his step?
Exactly. Yeah, well, I think he's got to. John, what I do want to say that the three of us who go up see the Red Sox play, and for the three of us to darken the door of Tom English's cottage.
How many?
Is that what you'd like to do?
Be very comfortable there.
We're just on the road all year, Lisa.
Evidently.
You worked this out, yeah.
I want to start, keeping track, see how many we've got.
Yeah. Can you imagine if we can keep track on a tour? Never mind in the studio. Let's head over to Glasgow, Scotland, and catch up with Bloomberg's Francine Lacqua. Morning, Francine.
And we are still too slow.
Good morning, John. I'm delighted actually to be here. It's day 4 because it started on Sunday. A little bit quieter. I know there's a lot of noise behind me just because there's a lot of the big Wall Street titans. I just saw Larry Fink walk through the plenary because today is Finance Day. We also heard from Secretary Yellen moments ago. I am delighted to be joined now by the AstraZeneca Chief Executive Officer, Pascal Soriot, to talk about all things sustainable, and we'll also talk about the vaccine. Mr. Soriot, thank you so much for joining us today. First of all, it's a little bit counterintuitive. I know AstraZeneca has had some very good plans on scope 1, 2, and also 3, but it's counterintuitive to look at the medicine industry and saying what you can do for sustainability. Is it all about drug disposal? How much clout do you think your industry has to actually make a real difference to ESG?
Good morning, Francine, and thank you for having me. I think the pharmaceutical industry and the healthcare sector as a whole can make a big impact. The healthcare sector globally represents about 4% of carbon emissions, so it's quite substantial. And we can, of course, as companies, work on our own emissions, which, as a company, we have a plan to do that. By 2025, we'll be carbon zero from that viewpoint. We can work on our scope 3 and our supply chain, and we are doing this as a company. And I'm also working with the rest of the industry to do that. And then importantly, we can work with the healthcare sector as a whole, like in the NHS in the UK, to really make sure we reduce carbon emissions across the entire sector.
So I guess the most difficult thing is how do you dispose of medicine? How do you dispose of it, in a safe way that's not damaging to the environment? How long away do we have to go until most medicine, 95% of medicine, are safe to dispose of?
Well, a lot of work is being done on this too, but disposing of medicine is really a slightly different topic compared to the carbon emission reduction we are committing to. But a number of companies are really looking at how do we actually recycle or dispose of our packaging of our medicines and recycle all of this in an environmentally friendly manner.
Do you think that these talks are reinvigorating the mean for sustainability?
Yeah, I mean, coming here is very energizing, I have to say, because I can sense the momentum is growing.
Yeah.
Not only governments are really making commitments, and I know that we would always like to hear better, stronger commitments, but it goes in the right direction. And importantly, the private sector is now stepping up.
Yeah, and now we need to look at the details and where the money is going and how you hold them accountable. Yes. But speaking of commitments, what's your commitment to vaccines?
Our commitment to vaccine is really to bring this vaccine to as many people as possible around the world. And so far we have delivered 1.8 billion doses of vaccine globally, mostly to the low middle income countries. And so we are very proud of this. Many people, thousands of people have worked day and night over the last few months to really deliver this vaccine that is making a huge difference in many countries around the world.
Mr. Suriot, what do you make of the new U.S. pricing bill, actually, in drugs? It seems to penalize some of the smaller molecule drug developments versus, for example, some of the biologics.
Well, you know, I mean, it was clear that it is clear something has to be done in the United States to help patients get access to their medicine at an affordable cost. So we really welcome this proposal to introduce a cap of $2,000 cap of out-of-pocket costs for patients every year. That will really help them take their medicine without, the difficulties they face today. And we also understand that something has to be done, and it's a negotiation between industry and all the stakeholders. And I think we have to do this without destroying innovation, which has been mostly in the U.S. over the last number of years, actually. I believe that what the discussion is going on today is really getting there, actually.
I understand, that the new bill also removes incentives to test kids. What do you make of that?
To
test children.
This I'm not aware of, I have to say. I'm sorry about this, but the discussion and the decision that has been communicated overnight is really balancing quite well, reducing price, negotiating the price of some drugs, but at the same time protecting innovation. Yeah.
I mean, is there a danger that because of the pandemic, which I know has put really health at the forefront, which means that a lot more people are engaged with your industry, that as you're dealing with the pandemic, it will not incentivize other companies, drug companies, healthcare companies to decarbonize?
Oh, I think the whole industry is actually committing now to decarbonizing. I'm part of the task force within the SMI, the Sustainable Market Initiatives launched by His Royal Highness the Prince Charles. And as an industry, we're working together to decarbonize and reduce our carbon emissions in an accelerated manner. So it's really quite exciting to see the pharmaceutical companies coming together to work with our suppliers, but also to work with NHS and other healthcare systems around the world, so collectively we can really reduce the footprint. Yeah.
Monsieur Pascal Suriot, thank you so much for joining us. He's, of course, the Chief Executive Officer of AstraZeneca. A little bit quieter, actually, because the next plenary has just started. We'll hear from Larry Fink, plenty more from Glasgow, COP26. This is Bloomberg.
Engine number one was able to do on the Exxon fight, it opened a lot of people's eyes to, I guess, the power that smaller investors can have. And I'm curious as to how other people can sort of look at what you did and use that is either a template or maybe just some sort of guide as to how they can sort of approach their relationships with other companies.
We founded the company in Engine Number One on the idea that we take the data, not ratings and rankings of ESG of the past, but we actually take the environmental, the climate, the social, worker data, and we simply use it to look at the valuation of companies and look at it over a long period of time. And so if you think about it that way, you own these companies. Everybody that owns the company, whether you're a big institutional investor or you're a small retail investor, you own the company. You have a voice, you have a vote every year.
Yeah.
And so our approach is, is to use the vote and engage with these companies over time.
But that's always been the case. I mean, at least in theory.
This week on Bloomberg Television and Radio.
We are on the verge of a disaster.
Join us live from Glasgow for coverage of the COP26 Climate Change Conference.
People are beginning to build some momentum, I think. The question is, will it be enough?
We'll speak with global leaders, keep you up to date on progress and setbacks, and analyze what it all means to you.
We're going to need to see some real action.
COP26, the UN Climate Change Conference. This week on Bloomberg Television and Radio. Tuesday, Bloomberg surveillance, the Fed decides. Will the Fed finally announce a date to start a taper? And how long will it last? Will they still view inflation as transitory? Find out Wednesday starting at 1:30 p.m. Eastern on Bloomberg.
What a moment for this economy. Let's talk about it. Live from New York City this morning. Good morning. Your equity market slightly negative, down 3 on the S&P, negative 0.06% on the Nasdaq, up a tenth on the Russell. Let's call it up a tenth as well. 4-day winning streak, all-time highs on the equity market in America. And Tom, let's not forget this. We've just had a 7% move through the month of October. And when you speak to equity strategists, there are some people who believe, Tom, it's not what we're getting from Washington, it's what we're not getting from Washington that's helping this equity market. And I'm talking about a higher corporate tax rate. That's why this swing overnight across this country, Tom, in places like Virginia and perhaps in New Jersey, and I stress perhaps because that one's certainly not over, Tom, that's why for a lot of people, if Senator Manchin gets a little bit more leverage, is that a little bit more fuel for this equity market,
Well,
Tom?
maybe, and you make a good point about the corporate tax, but John, we got to have a moment of silence for the crew that said barbell like a long 8-9 months ago into thundering silence, who said you got to be in the techs, because the techs have had like an 8-week tear or so.
If you sit on the S&P, Tom, if you sit on the Nasdaq, you're doing okay.
Yeah.
You talked about hugging the index, holding it close. It's been a benefit, hasn't it? Do you want me to move
You're
on?
sensitive this morning.
Get romantic.
You're sensitive.
Switch out the board and get to the bond market. Let's get romantic about the Fed. 2s, 10s, and 30s. Since the Fed last met, the S&P 500 is up 5%. 2s are up about 20 basis points. We've more than doubled on a 2-year. We came back a little bit yesterday, just softening up a little bit going into the Federal Reserve later on today. But that's what it's about, isn't it? At the long end, it's about the tapering of QE. What does it mean for bonds, for bond yields? Is it on autopilot, a set course, all of that good stuff? I can hear how excited you are, Tom. At the front end, it's about the degree of pushback we get from this Federal Reserve about the increased rate hikes we've seen and a pull forward we've had over the last month.
So, John, you and I are going to do the Fed show with Lisa today, and we're going to be in the presser. And the bottom line is the bond screen you're showing on television and on radio, folks, it's where it was X number of weeks ago. I'm sorry, as Alan Ruskin said, this is a chairman that's managed the markets towards stasis.
Let's see, Tom. Let's see. How do you pivot away from the T word without making people think that you're endorsing where rate high pricing is right now? It's tough.
You invent a new word.
Rock and a hard place. Maybe, what's the new word you think, Tom?
I don't know. We'll ask Eric Friedman. Let's do that.
Persistent.
Just wait. Just
Are you done?
Can I finish? Keep interrupting.
Continue.
Let's get to the commodity market.
Please.
WTI. OPEC Plus having the pressure piled onto them from the United States. WTI at 211. We're coming in 2 percentage points. You know, I had a message just the other week. Someone reached out to me and said, why does Jonathan Ferro keep cutting off Tom Keene? And I read it.
There you go.
I thought, really? Are they confusing us? Do they think I'm Tom Keene and you're Jonathan Ferro? Because surely it's the other way around,
John,
Tom.
what's changed seriously here with crude coming in is the linkage here of hydrocarbons into the soft commodities. I'm sorry, for the politicians, that really matters.
Yeah, politically speaking, Tom, isn't it interesting that the president comes back from Glasgow, has to sort out this mess with his own party on getting these bills passed, And at the same time, he's not talking about climate change. He's confronting the price of that.
Should I interrupt?
As they leave,
Okay.
Tom,
Yeah, you're right, John.
As they
absolutely.
leave, that's where the focus is. Getting OPEC Plus to do more.
I can interrupt? Okay, thank
you.
You
can go.
Go. John, thank you so
don't
much.
need my permission.
Joining
Carry
us
on.
now, and this is a really important conversation. We dovetail the gentleman from U.S. Bank Asset Management with Abby Joseph Cohen to be with us here in an hour. Eric Friedman joins our CIO. Always some wisdom here in his research note. Eric, is the glass half full in that you have a tendency in your modeling to say up and higher, where you raise your estimates out a year or even out 3 years?
Tom, good morning. We do think the glass is half full, and we are actually very optimistic, really predominantly based on earnings. And that's been the story. I know you've covered so well as a team. There's been this stepwise function up. We started the year at $160 of operating earning estimates for the S&P, and now we're at north of 200. We actually think we'll get to 220, even 230 next year. So our viewpoint is that it is a glass half full environment. We are concerned, though, Tom, about the first quarter of next year. Everyone knows there's a big base effect looming, and that really kicks in March. So question for us is whether the market will actually sell off on a tough base effect starting in March, April of next year, but we still think the glass is half full.
Eric, at Colgate, Econ 251 is that intermediate microeconomics course where everybody, including me, goes down in flames. And it's about the word ambiguity. When do rate rises off of inflation flip the equity discussion from optimism and resiliency over to a challenge?
That was a tough class for me too, Tom. I think that if you look at the discount rate we're looking at for the 10-year, we're at 185. We think that's fair value for the 10-year. North of that, we have some concerns about not just equities, but also real estate in particular. So we would say that the ambiguity really kicks in if we see a faster acceleration of rate hikes. And as Jonathan teed up at the start of the segment, one of the things that we'll be looking for the Fed today is if there is a walk back of those expectations. So the ambiguity really kicks in, Tom, we think feverishly, if we see that terminal level, if you will, of rates go up, or if we see the Fed moving more abruptly than markets currently consider, which we think is aggressively priced in at current times.
So, Eric, in other words, if Fed Chair Jay Powell does not push back against market pricing, you think that there could be a material move in markets?
We do, Lisa. We think that there's a 50%, if you do the long math and look at OIS spreads and basically back into rate expectations, there's a 50-50 shot, according to the market, that the Fed will raise in June. That's likely before the Fed will stop tapering. So what we think there has to be some signal of we're not going to see a rate change until tapering ends, or at least more clarity on what the time frame may look like. So that confusion, and we think if that is accompanied by both the ECB, what we've heard out of the MPC, what we've heard out of Australia, that could set up the market to actually expect discount rates to go up higher and faster. That's not priced in right now.
Wait, please elaborate. So in other words, you're saying that perhaps this could cause a serious yield curve steepening that the market's not priced for? Is that the idea?
Yeah, Lisa, I'd say that right now you've heard a lot of jawboning from Australia, from the UK, from, walk back a little bit from Christine Lagarde the last couple of days. But if central bankers don't say, hey, wait a minute, we get it. There are challenges with demographics. There are challenges with productivity. And so while we may raise interest rates, we're really not going to raise them very quickly, number one. And number two, the terminal value of those rates will actually be fairly shallow. If there's language besides that, markets are not priced in. If you look at just how tight spreads are across pretty much everything, CMBS, high yield, non-agency mortgages, pick your metric, things are tight. And if markets anticipate the Fed is going to actually move a little bit more quickly, we don't think that's being totally factored in right now.
So do you think that credit is the most vulnerable, or do you think that equities will see a similar type of sell-off proportionate to what we might see in credit?
We'd stack rank it as equities would probably feel it the most, then credit. And I also think that they have to be fairly specific on sectors, Lisa. One of the areas that we have a question about heading into the next couple of years, and again, we're glass half full bullish, but we are concerned about what CMBS may look like. Commercial real estate as a category is very, very tight. And if you look at corporate footprints and what people are thinking about doing with physical space, over the next year and a half, that chapter's not been written yet. So we do think the combination of race as well as what people are going to be doing with footprints is very important for that market in particular.
Eric Friedman, what is your terminal value or justification timeline to own the high-flying techs with multiples of 30, 40? I saw one the other day that makes money at a 60 multiple. How far out does a pro like you rationalize that to rationalize ownership? Do you have to think out 3 years, or do you have to go out even further?
Yeah, I'd say, Tom, really 3 years to 4 years at current levels. That's the level that for, again, the high flying, low earnings, no buyback set of companies. That is the time period you have to use. And unfortunately, with a negative real yield of minus 1.005, out 3 decimal points for you, Tom, that's you're allowed to do that in this environment. I do think that if you do see that step higher in real yields, let's call it to negative 0.5% or even flats, you can't get away with 4 years, and those expectations would come down in terms of multiples. So we do think that this sustainable low rate environment is going to be not, again, necessarily called into question, but will be tested over the next 6 months. So we and others are going to have to really rationalize if we're going to look out 3 or 4 years, or we have to take a short time horizon. If you take a short time horizon, then cyclicals and core S&P are certainly more attractive than those elongated tech valuations.
Eric, just want to squeeze this one in, just quickly. Give me the short version. How has your view of fiscal policy evolved in the last couple of months?
Jonathan, we're price takers like everyone else in fiscal right now, and I don't say that flippantly. It's a case where if you look at what happened in Virginia last night, there's going to be an acceleration of activity in Washington. We think there really has to be. So, we would expect there to be, specifically, and your point was great on taxes. Our S&P model is really harmed by higher corporate taxes to the tune of probably, a multiple and a half lower if we see a tax hike. So that's the biggest variable we're paying attention to in our model right now is corporate tax levels.
Eric, thank you, sir. You're not the only one. Eric Friedman there of US Bank. Lisa, has been a big focus for everybody in the last few months.
And frankly, how much does the win that we saw down in Virginia really edify this position that you're not going to see corporate taxes really rise all that much? And how much does that actually give some sort of boost to equities going forward?
You'd have to think, and we've said it a few times this hour, Senator Manchin wakes up this morning with a spring in his step, doesn't he, Lisa?
He wins everything, frankly, and he looks like he's in the right place for the Democratic Party right now based on these wins. That might be too much of an extrapolation. These could be idiosyncratic in certain levels. However, there is a pretty big message being sent right now.
I'd go one step further as well, Tom. I wonder if it clips the wings of the extremes of both parties, given how Glenn Youngkin ran in that race.
Well said. I think that's really, really true, John. Let me give you just one vignette here, and I don't have the exact details in front of me. I'm not doing a Steve Kornacki thing. And that is, John, the district attorney races in Manhattan, in New York City, and out on Long Island in 2 counties, there's not enough votes in yet. There can't be any final decision. But it's stunning how the GOP has done in those important races.
Tom Keene, Lisa Bramett, and Jonathan Ferro staying on top of that story for you. And more importantly for this program, what does it mean for policy in Washington? Your equity market all-time highs into Wednesday from New York City. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. In Virginia, Republican Glenn Youngkin has sent Democrats a wake-up call for 2022. The candidate backed by Donald Trump defeated Democrat Terry McAuliffe in the race for governor. Youngkin returned some suburban and independent voters to the Republican side. That's an omen for President Biden and Democrats hoping to keep control of Congress next year. And in New York, Democrat Eric Adams has been elected mayor. The Brooklyn borough president easily defeated Republican Curtis Sliwa. Adams will immediately have to grapple with the city's COVID response, widespread inequality, and safety issues that keep workers from returning to offices. Younger children across the U.S. are now eligible to receive Pfizer's coronavirus vaccine. The head of the CDC has granted the final clearance needed for the shots to begin for 5 to 11-year-olds. That ushers in a new phase in the U.S. pandemic response, widening access to 28 million more people. And Zillow is shutting down its home flipping business after racking up losses. The company plans to take write-downs of up to $569 million. It will also reduce its workforce by 25%. The decision comes after Zillow's vaunted pricing algorithms led it to overpay for homes across the U.S. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Live from New York City for our audience worldwide on TV and radio, alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. On this Fed decision day, your equity market down about 0.1% on the S&P on a 4-day winning streak. In a bond market, 152.96, yields lower by a couple of basis points. A really important political shift in this country overnight, potentially, that we need to discuss, and a Federal Reserve decision coming up a little bit later this afternoon. Another important story developing through the week over in Glasgow, Scotland. Let's head back to catch up with Francine Lacqua. Hey, Fran.
Hi, John. Thank you so much for that. I'm delighted to be joined by the President of Costa Rica, President Alvarado, to talk a little bit about his country, some of the pledges here, and, of course, what can be done to save the planet. President, thank you so much for joining us right here live on Bloomberg Surveillance. Nearly a quarter of your land mass is under some sort of conservation. You're doing extremely well in terms of energy production, electrifying into more renewable sources. The big concern is transportation. About 50% of your emissions come from transportation that is still dirty. How can you make it cleaner?
Well, thanks for the opportunity. It's a pleasure being with you in Bloomberg. Well, it's true that our main footprint and fossil carbon footprint comes from transportation. Our electric grid, the electricity we produce, is 99.5% clean and renewable. So our great opportunity is to electrify our transportation. So far, what we have done, we have increased the number of electric vehicles in Costa Rica. We have the highest per capita number of vehicles, electric vehicles in the region. That's one. And for that, we have a tax relief on electric vehicles, and also we multiply the stations to charge vehicles so you can go all across the country. Second, mass transportation. We're building an electric train throughout the main cities. It's a project of 82 kilometers, and it's also an electric train from clean electricity.
Mr. President, what kind of timeline can we actually see a meaningful difference? And when you look at the cars, I mean, what's selling? What do people want to buy?
Well, our timeline, we launched it by 2019, February. We were the first to launch our decarbonization plan, and we have a pathway from now to 2050. But by 2030, we have to see a strong progress in the electrification of our transportation to dramatically reduce our carbon footprint, and that's what we are aiming. Also, with new schemes of public transportation, because we're not only targeting to private vehicles, but also public transportation to make it cleaner, more efficient.
Mr. President, talk to me a little bit about the carbon market. First of all, are you pushing for some kind of carbon market offset that will happen very quickly? I know Panama is getting involved in carbon. When are we going to have a price for carbon?
Well, that's one of the big discussions, and actually that's the discussion on Article 6 that's going on in the negotiations during this COP. Yes, we're pushing for that, but I think one of the great discussions has to do with, first, with trust. Trust in the developing world that we're going to implement the measures, and also trust from the developed world that they're going to commit finance, both public and private. We have seen advancements, and we have seen schemes, but they are still too frail.
I was going to say, have you seen enough? I mean, is $100 billion enough?
Not yet.
Right. When will we see it, and how much pressure are you putting on some of the developing economies?
We're being very open. I mean, whenever I address the floor, a couple of times that I've done, I've been very open and frank, because, you see, there's the discussion of the developing countries are too risky. But here, the only risk I see is that if we don't act, there won't be any planet anymore. So I don't see any risk higher than that one. Risk is a matter of, it's measured also in time and framing.
So do you feel cheated by some of the top emitters? I mean, they also come from the developed world. I wouldn't use that word.
I think we need to go further in our commitments. I am confident because as humanity, I am optimistic.
Right. How much do you need on the table to be sure to implement some of the strategy that you have from developed economies?
Well, for example, through our policies like the High Ambition Coalition for Earth and Nature that is pushing to preserve 30% of oceans and 30% of lands, so far we have gathered the support of $5 billion through philanthropy. And that's a great start. Yesterday, Colombia, Ecuador, Panama, and Costa Rica, we together announced the protection of our oceans area, which is going to be one of the largest in the Pacific, and that's supported also by philanthropy and by other contributors.
We're in conversation with the president of Costa Rica. When you look at some of the things that have been on the table and what more can be done, you're still dealing with a pandemic. Costa Rica is an open economy. The pandemic and COVID-19 is not 100% out of control. Is there a danger that it derails you and other countries actually in developing economies from reaching some of these sustainability targets?
Well, that's one of the great risks. In our case, we have for the objective population, 12 age and older, we have more than 80%, 86% of a population with at least one dose, more than 65% with 2 doses. So we have advanced in that direction. But the fact, for example, that Africa has just 5% of people vaccinated is a great risk, not for Africa, for the rest of the world. So then we need to tackle that because a new variant can take us to the beginning. So we need to tackle that. Second great risk, and this is for emerging economies, for the developing world, for Latin America and the Caribbean. We've seen an increase on our fiscal deficits because we have to increase expenditure to tackle the pandemic, also increase expenditure to tackle climate change. Extreme weathers demand governments to invest in emergencies, for example. And at the same time, due to the pandemic, we have seen a decrease on the taxes we collect. And those fiscal deficits are a new risk that we face. We are facing a debt risk throughout the region.
All right, Mr. President, thank you so much. Is it nice being back in the UK? You studied here.
Yeah, I studied here. No, it's great. The only thing I didn't miss is how cold it is.
Cold water. I know it is. It's freezing in Glasgow. Thank you so much, President there of Costa Rica. With that, Tom, I'm going to hand it back to you. In New York, I imagine it's warmer. Not sure. Here it is pretty cold, even in the Congress Center.
Francine, I do not miss the weather. I miss you. I don't miss the weather. Francine, thank you very much from Glasgow, Scotland. Looking forward to catching up with Fran a little bit later this morning, Tom. 8:30, about 8:15, we'll catch up with Al Gore.
John,
I'm very sensitive today, aren't
you
I?
You're very sensitive.
Just ahead of
John,
the Fed, you know?
for our audience worldwide and for our audience across America, what's the difference between Edinburgh and Glasgow?
Is this a joke?
Football teams, Tom.
No, I'm asking.
In terms of culturally, I've never been. I've never been, so I can't tell you.
It sounds like a setup.
Never made it up there, Tom. I'm not walking into this trap,
so
Lisa.
English.
I know.
You're so English.
That's very English of me. Is that right? Do you want to move on?
Let's move on. On the
Smart.
pandemic and a serious idea here, Bhakti Ansari joins us, Director of Johns Hopkins Center for Global Emergency Care. Bhakti, we've got a compressed time today. I want to be very straightforward. Are we going to see further lockdowns, for example, in John Farrow's England or in Scotland or frankly in Asia as well? Are we still in lockdown mode?
So we are seeing a new surge with a new Delta Plus variant called AY4.2. This has not been named a variant of concern. We think it may be similar to the Lambda variant, where it may just dilute out, and I don't think we're going to see future lockdowns.
We're not going to see future lockdowns, and there's some optimism here on deaths. I watch my meter, which was 1,500, 1,400, 1,300 as well. Obviously, the right direction. When is all clear for Bhakti Ansari?
I don't know, actually. I'm thinking a lot about this concept of herd immunity, right? And so you would think we were close.
Yeah.
Really, out of the pandemic, we said 60 to 80% of individuals need to be vaccinated for herd immunity. Well, America is there, right? 67% of individuals had their first shot. Over 60% have been fully immunized. However, there is new variants such as AY4.2. There's patchy areas where vaccines haven't happened, and vaccines don't stop transmission of the virus, we think. And so it is unclear when we're going to be in the all clear. maybe this is our new normal, but it'll be a manageable new normal as we move forward.
Dr. Hansadi, a lot of people are saying this, and yet in China, they're telling residents to prepare for further lockdowns that are severe. They're talking about widespread breakouts of 93 people, which would be basically a blip on the chain when it would come to many other nations. How much is this an aberration in a world that's moving on versus perhaps an indication of something worse that will flare up over the winter?
So I think there's a lot of fear, right? And there's a lot of lessons learned where we did not act early enough and did not lock down quickly enough that led to these surge in cases that took many, many, many lives. So there's a cautiousness here, which is expected and necessary. However, with a different state of play, the mortality has been lower with future pandemics. Our children are finally getting vaccinated. Vaccine rates are high. And things like universal masking is now broadly available, which really does decrease transmission of the virus.
Yeah.
So again, I'm not convinced that we're going to get back to where we were a year ago.
Dr. Hansadi, we just had Election Day here in the United States, and one of the big issues were mask mandates that kept coming up. And I'm wondering, when do we move beyond this being a political hot-button issue and something more in the scientific realm?
I wish we'd moved on about a year ago, right? This was never meant to be a political issue. The challenge here is we look at the healthcare setting, where I think we have the best experience in how to protect vulnerable individuals. Healthcare workers are still masking up when we see any patient, regardless of their COVID status, their vaccine status. And that is because we know we can be asymptomatic carriers, we can protect those that are ill. So I don't know if universal masking will actually go away. I think some hybrid situation where there's certain situations where you do need to mask will likely be prevalent. And I don't think this should be a political issue. We're just trying to keep everybody safe.
Doctor, thank you. Always great to catch up with you. Dr. Bhakti Hansati there of Johns Hopkins. On the political issues, here's a story from the Washington Post right now. Lead paragraph reads as follows, Tom. Senior Democrats are weighing expanding a new minimum tax on upper-income households in exchange for repealing a limit on state and local tax deductions created by the 2017 Republican tax law. This according to three people familiar with the negotiations. This is important, Tom, not for this specific policy, but the very fact that perhaps this is not finished, that the negotiations around taxes is not over.
Well, I go to Senator Sanders of Vermont there, who's outraged over the SALT tax and the benefit that has, as he perceives it, to the wealthy. I use that in his language. And you've got to believe that to get Senator Sanders on board, they've got to do something like this. John, how do they do this after the results that we're seeing?
No idea. And to be clear, Tom, the wealthy is not his language. Billionaires is his language. And there are only 700 of them in this country. So I find the continued use of that to be interesting.
It's an interesting theory. Lisa, should we celebrate and promote John's show Friday afternoon, The Real Yield?
You want to do that already?
I think we have to.
Isn't it a bit early?
A Wednesday celebration.
No, it's not
Happy
early for
birthday,
George
John.
Saravelis.
Sentimental.
George Saravelis at Deutsche Bank moments ago with a blistering note. John, he doesn't mince words. We've got it wrong about the Fed parlor game, dovish, hawkish, and all that. He says, look at the real yield, negative 1.00%. It's about excess savings, and critically, Mr. Saravello suggests look at the low terminal rate being framed out.
Let's build on that with David Stubbs. He joins us next on this program. Live from New York City this morning. Good morning. Tom Keene, Lisa Bravitz, Jonathan Ferro. We're down 4 on the S&P. We're negative 0.1%. Heard on radio, seen on TV. This is Bloomberg Surveillance.
хорошо подготовлены, насколько это было возможно за столь короткие сроки. Это на самом деле эксперимент. Поэтому мне не хочется употреблять такие слова, как страх, боязнь и все прочее. Мне хочется говорить, что это очень волнительно, но одновременно и радостно, потому что, ну, вы же понимаете, как мало людей вообще там были. А у нас есть возможность полететь в космос, и не просто полететь в космос, а сделать там то, что мы умеем по-настоящему хорошо делать на Земле. Это снять кино.
Тоже это не просто, вот в чем дело-то. У нас же экспериментальный во многом этот проект. Поэтому мы сейчас столкнемся с кинематографическими нюансами, которые мы могли предвидеть отчасти, какие-то, наверное, не могли предвидеть. То есть, несмотря даже на то, что, опять же, все делились с нами там космическим опытом и так далее. Но это опыт, это первый раз. Ну, то есть второй будет проще.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Has the luxury of being a first mover.
The market doesn't own the definition of transitory. The Fed owns the definition of transitory.
The Fed has made sure to communicate their stance because they know the impact on the equity market.
The wage picture, the labor market picture right now does not scream hike now.
The Fed is not trying to kill the expansion. They're trying to extend it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
The Fed decision hours away from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market just off all-time highs. Futures softer by 0.1%. Tom Keene, it's all about Chairman Powell a little bit later.
It's about Chairman Powell later. We'll have our special coverage this afternoon, folks, with some terrific guests lined up. But far more than that, after the press conference, it's the then what. And the then what, John, I'm sorry, the jobs report's getting no respect 2 days on. That is critical for all, including the chairman.
Payroll's Friday just around the corner, Tom. Before we talk monetary policy, we need to talk about fiscal policy and the extra leverage that Senator Manchin may have got overnight by the political events in this country.
Well, the political events are in Virginia. Some predicted it. Many did not. There it is. The Republicans win. John, New Jersey is a jaw dropper. We don't know yet. 88% of the vote in. Mr. Chitterelli ahead of Mr. Murphy by a teensy-weensy amount. We'll see how that goes. What it is, John, is a readjustment. The liberals at a tough night.
You raised the important question here, and Lisa, let's talk about it. What's the big surprise here? The swing in Virginia, or how tight New Jersey is?
New Jersey, I think, is the bigger surprise. But frankly, the fact that both are occurring at the same time is drawing a line, a theme, if you will, of perhaps the Democrats losing clout, potentially losing the 2022 elections, the midterm elections. Dave Wasserman of the Cook Report coming out and saying that if things don't change, the Republicans will easily sweep in 2022.
The President of the United States, Tom, returning to the United States, with, it's fair to say, TK, a few problems.
Yeah, I think so, starting with what he did not